I actually got moved today to Charles Schwab. That's great. Has anyone experienced that today?
Oh, I got moved a while ago.
Mine just said right now.
Yeah, it wasn't a big deal though. Just had to make a
Is it the
password.
same username or no?
Yeah, I just had to make a new password.
Oh,
I haven't logged into mine this week at all. I've been working.
I got an email saying that they were going to do it at some point, but hasn't done it yet. But I'm not active my account so much, so maybe the active ones go first.
sorry guys. I didn't think I can log in right now. Let's see. Mm, Um, not getting the code from them. All right. Well, let's see. Choose another method. I apologize. I didn't think they. Hmm. Man, the two-factor authentication sometimes is so annoying. No, well, I'll work on it. Let me see here. Let me share my screen. Mm, Let me know if you guys can see it. Guys, good?
Yeah.
Yes.
Yes.
All right. So I'm trying to change the actual material a little bit for you guys to kind of simplify the market profile a little bit in terms of what is really important when you're looking at market profile and what is really like side note, almost like market profiles generate a lot of information. So, and sometimes it's not really like a strategy that you're using certain components of market profile, but it's kind of good to know what is really being thrown at you. And it's almost like one of those SAT questions. They give you a paragraph of data, right? And then they ask you a simple question, and you can ignore 85% of that paragraph because the answer is in that 15%. I'm not saying that's how the market profile always works, but it does generate a lot of information that sometimes it can be kind of paralysis from analysis. So I'm kind of rechanging that, like changing the profile to and the training to kind of focus on the key aspects that I look and then kind of show you day to day what do I pay attention to, right? So that's what we're going to focus here. I'll go in the presentation mode and then I'm probably going to switch back to trading view to kind of show the examples and what's going, and then cumulatively or not cumulatively collaborate with you guys and figure out, where do you guys fail? What is the issue when you're trading, right? Once you have the market profile and it's finished in a day, it tells you information, right? But during the day, the market also tells you the information that you can use for making trades at that time. And I think that logical aspect of understanding what the market's telling you at that time is where most people freak out and you guys start thinking irrationally and then start taking trades off of I believe instead of yes, the market's telling me something happened here, should I listen to that or go with my gut? And a lot of times a lot of traders, they have a good plan but they don't execute the plan because they got trapped in a notion of I think it should do this or I think it will do that. And that's where a lot of you guys struggle, at least in my opinion, right? So what we're going to talk about is market auction theory, profile, developing value, and then the key levels. Environment date types, I think we've beaten to death, and I don't have it in this profile built out yet in the training, but I have it in the first one. It's identical data. It'd be one slide for you to figure out the date types that you're having. So we'll cover that, and tips and details will go into the live charts. Okay, so when you think about market, right, a lot of people really don't even, understand the purpose of the market, right? And just like any market in the world besides the stock market, it's really there to bring in the buyers and sellers, and it's to facilitate that trade to make sure that the value of whatever is being auctioned, whether it's a stock, whether it's a car, that you find the happy buyer and that the auction at some point concludes. Either you find the buyers or you find the sellers, and then the auction can proceed to go in the opposite direction. And that's what the stock market does, right? And your job as a trader is to find the probable setups and join the auction in the direction it's going. Uh, Playing against the trend in a major auction and trying to time the tops and the bottoms without confirmation is usually what gets people in trouble, right? And we've all done it where you short it and then you get a short cover or a pop above and then they continue. They did a lot Friday. But that's your goal as a trader is to read this information from market auction, think about the price and value, and then see if you can find a probable setup that's going to work in your favor. Uh, if let's say the market didn't exist, how well would the trade be facilitated? Probably not so well. I mean, imagine if I had to call Drew in California, be like, "Hey man, you want to sell me the 10 shares?" And he's like, "Man, I bought him at 15. I want 55 for it." Well, if I don't know anyone else that's selling that share, me as a buyer, there's a high chance that I'll be like, "Okay, I'll buy that." But if a supply of that somebody's selling and there's different prices that they're asking for, well, then the highest bid, what I have, and the lowest offer from all these participants is what's going to make a transactional point in the market. And that's your, footprints, and that's what's established when we look at the trades. It's a highest bid, lowest offer, and then, we have a four-way of that, right? You can have people selling at the ask, and you can have people buying at the ask. You can have people buying at the bid and selling at the bid. And those are the four different components of how the market auction works, right? And dependent in the context of the price, we find out if those people were aggressive sellers or buyers. And market profile, along with the market auction, gives you that visual representation of who's participating, who's entering the market, is the price above or below the value, and are we getting any responsive or initiative activity? Once you understand just these tiny little concepts, your trading will take off. At least half of understanding what you know now is going to be probably twice as good. Because if you can find the value and the perception of other buyers and how they're reacting, your day is already going to be probably half, maybe 50% better than what you're used to, just because you'll be able to join and see, oh, I see buyers stepping in here, other time frame participants or sellers. You can go along with them. Markets spend 75% of the time in balance, right? So when they go on in balance, the main point when you go from balance to imbalance is what? What do you guys think? What do you as a trader watch when the price goes from balance to imbalance? What is the most critical point that you're looking for?
Acceptance.
Oh, good job. So we want to know if this price is going to be accepted or rejected, right? And that's, when you look at TPOs, like I think we had it maybe this week or prior week when we had decent ranges, like in double distributions, right? Where we say if it, accepts the higher or upper distribution, most likely it's going to trade there and then eventually creates an imbalance. But certain rules apply, right? And if you're no longer accepting the top distribution in a double, let's say in a B-shaped profile, and you crack in the bottom one, there's a level typically that we identify in that case. Okay, well, if you crack below this, then you're going to be most likely accepting the lower value. And when you accept new values, it's normal that they shift to the extreme of that one, whether it's high or low, they're usually going to test that. So price has to be accepted when they're leaving the balance, right? If they're rejected back inside, that shows that there was no new business initiative there, and that it was mostly absorbed by the responsive sellers. So I think this slide pretty much I covered, right? Any questions so far? Does it make sense, what I said to most people, especially new folks? You care about price acceptance and rejection, just like as if you were to go to a market to buy. We bring up oranges, we can go back to our peanut butter example. If you go to a store, right, and a peanut butter jar of peanut butter is $20, most people in today's economy would say, okay, well, we don't need the peanut butter, right? So you, as a buyer, you're really not trying to buy peanut butter because it's above fair price and it's above value, right? Well, let's say when the seller notices that the peanut butter is not selling and he brings the price back down. What if he brings the price all an unfair level? What's going to happen?
Everybody's gonna jump in to either buy or sell it.
Yeah, and when the price drops below value, you're going to have hopefully responsive buyers coming in and buying the peanut butter, right? If the auction continues, right, and the price doesn't jump back in, well, that's telling you that the market is going to continue down in search of stopping the selling and looking for buyers. So the acceptance concept is very, very important if you're going to use market profile. Like I think that's the best way for you guys to think about trading is the price being accepted here or not. And once you guys ask those questions during the day, I think he'll help you realize and know how to use the market profile properly. Okay. Here, so what I did is I basically kind of went to the chart just to kind of give you guys what it looks like, right? So balanced markets doesn't mean that it's not gonna, a lot of people are fixated on a single line support and the resistance, right? Markets are always going to test beyond that and below that, right? And that's where you get those advantageous people, right? The people that are responsible sellers, they will be sitting here and their goal is to bring the price back down. If they bought it below the value, their goal is to sell. So that's called two-sided activity. When both buyer and seller agree on price, right, that's where two-sided activity, and that's where a lot of volume, transactional volume, occurs. And that means it's a healthy trade, right? It's healthy trading as long as the volume is there. So now think about the example of oranges, right? If you only have one seller of oranges at the marketplace, that's not going to be a healthy, auction, because that guy controls the market. It's almost like a monopoly, right? You're not going to have a lot of different prices. He can leave one price, and whether you buy it or not, there's no other suppliers of that good. But the more participants you have, the wider the balance area, the wider the range. That means they're happy trading in this range, just like we experience now in ES. If you guys recall, the 49.60 level was our value area high from prior weeks. And in a in a twofold here, they broke that range the week after, and then they came back, and then 1960 acted as literally a launch pad. They said we accept the prices higher, and then you see that we reached new all-time highs from that point onwards. Whether it was Nvidia driven or not, the market responded by buying, meaning they defended and they believe the prices should go higher. So now the market is just going to auction, right? We don't just go between balance that we are in right now to imbalance constantly, right? Market can stay in the balance for longer periods of time, and it doesn't necessarily mean it's a quick turnaround. They'll go to balance, imbalance to balance, and so forth till they find a new value area. And I'm giving you an example here, right? Once you break out of balance, whether it's daily, weekly, or what a time frame trader you are, if you break a balance, you're looking to make sure that we have acceptance, right? If we do accept it, that means they're potentially going to be seeking prices higher, and the new value is going to be found. If you do crack below, a certain bracketed market or balanced market, like in this case, you're looking to target the opposite of extremes, because if these, buyers are not able to hold, that we got to search for buyers. And the last time we found buyers was most likely below that previous value area. So as you approach the value area of the previous bracket, you're looking for long opportunities because other time frame buyers showed up there before, and the perceived value of that asset was cheap, therefore it got bought up. Does everybody understand how I look at price, acceptance, and rejections? Any questions? Okay. What do you guys think is a clear direction in a balanced market?
Just at fair price, so it's just trendless, right? It's in a range.
That's correct. I was just making sure. There's no direction in a balanced market, right? A balanced market can have a trend within the balanced market, right? You can have higher highs and higher lows, but there's no conviction, there's no confidence to get out of it, right? That means that there's no direction. And in the balanced markets, like I said, that is considered a fair price. Once you step out, let's say this is our value area high and you go above, that means the price is above value and you're expecting responsive activity. You're not expecting initiative buyers here. You're expecting people to drive the price back in until that's cracked, right? And then we have an impulse or price going higher, then it's a breakout to the upside and you're watching to see if it's going to be accepted or not. So in a bracketed market, you're not looking to be what? Are you looking to be responsive or initiative buyer?
Responsive.
Always responsive, right? And a lot of people that they miss the opportunities in bracketed markets, they end up chasing. And once you end up chasing in a balanced market, you really are killing your risk to reward and probabilities of you making money on that day. So think about this. Let's say you didn't short here once we failed this value area high. Let's say you short somewhere here once you put in a lower low. What is your reward now? What is the measured reward you can have? It's half of what you had previously, because now your room is between POC or let's say 50% here at the midpoint all the way to the value area low. You're really restricting your opportunity for the risk reward. So in balanced markets, if you miss an opportunity, it's better to sit it out than actually, try to catch up. In trending markets, right, sometimes it's hard to find what is that good entry. Because when you're going like we have been higher, it's almost sometimes you don't even get a pullback. So how do you determine in a trending day what's a good opportunity? Well, let's say we have an IB, we are breaking to the upside, we're not cracking back inside the IB. Well, then any impulse move and a pullback using volume profile or any accumulation shelf you use as a buying opportunity. Balanced markets has certain rules on how you have to play it. On imbalance, you have a little bit more freedom because is the opportunity greater in balanced markets or imbalanced markets?
Imbalanced.
Yeah, it would be imbalanced. Does everybody understand that? Is there anyone that would disagree? Okay, so that's correct. I mean, imbalanced markets, you have fixated levels, right? And you can manage with that. Imbalance, you have to use, some prior areas or fibs or whatever the preference is for extensions. But for, balanced, you're controlled. Any questions on this slide? Okay. So this is just explaining what I remember, right? And then trending markets, that means one side has one, whether it's aggressor buyers or sellers. It just means that the perceived value is no longer accepted by one or the other buyer or the seller. Okay. I noticed that a lot of people struggled with the responsive and initiative. Is there anyone that doesn't get it? It's okay if you're new. If you don't understand it, can you just say it? I don't get it, and we can. This slide should be fairly self-explanatory. Does this?
If you don't mind, can you go over it?
Yeah. So when you think about, So if you think about the stock market, it typically goes like this. When a price, let's say this is our value area high, right? And this on the bottom is our value area low, right? So the price trades here. Once we, come above the value, so now you're above the value because 68% of the time or volume, depending on what you're using, I'm trying to draw 68. That's horrible. But 68% of the volume is basically spent inside the value. And that's what we call value trading, because majority of the volume is inside the value. So if the price is being agreed inside this, that means the other remaining percents are split here and here, correct? And that would be your bell curve. If you were to flip it, it would look like something like this, right? You would have the mean, you would have the first and second standard deviations. So if we pop out above the value, right, you're expecting that we're going to have what? If this is our value and the price goes above the value, what are you expecting there?
Responsive buyers to bring it back.
Ooh, ooh.
Responsive sellers to put it back in.
Yeah, you want the responsive sellers. You don't want, there's responsive buyers go when it's below the value, KJ. So when the value drops, let's say iPhone, and I use iPhone because it sticks with most people. If iPhone 15 Max Pro goes on sale tomorrow for $150, what do you think happens to Apple's inventory of iPhone?
Go down.
It's depleted.
It's gonna be depleted because everybody is gonna find that product as below value and they're gonna buy it back. So here you have responsible buying below means responsive, so that you would have these guys show up here, right? When you're selling, when something goes above value, right? As a seller, what do you want to do? When the price goes higher, let's say, somebody drove the price of an iPhone, it was 200 here, and now the price of iPhone is 2,000. Well, the responsible sellers, they're gonna, if they bought it on the bottom as, responsible buyers, they're gonna look to sell and make that profit, right, of $1,800 a unit. But if they start buying here, that means that something changed in the market. The sentiment of the value of this is no longer here. If you get initiative, meaning buying incurs here, that means that something changed. The sentiment changed, and that would be initiative. Do you guys expect to see buying initiative in a bracketed market? Is this expected?
No.
No.
Okay. So what is expected?
Selling.
Sellers come in.
Yeah, sellers is expected. Does that make sense to everyone else?
So, Shorty, question.
Mm-hmm.
When you say buying above, so those are initiative buyers, would you say they're buying on the ask above value area high?
So think about it. Here you would have the way
You got
this
limit orders. Yeah.
exactly. So you would have ask and you would have the bid, right?
Mm-hmm.
If we are sitting above value, let's say here, what would you expect to see if the responsive sellers are there?
They're selling on the bid.
Well, careful.
On the ag. It's limits on the ag side.
So selling above, you would have responsible sellers. They would have their order sitting here. Let's say this price is 200. So when you're reaching resistances, you're looking at the ask to see if the people were selling there. Inflated ask at resistance means there was a seller sitting there, right?
So those
If
are
you
limit orders.
those are limit orders. If you see, for instance, an inflated bid and then price goes down, what would that tell you?
The seller stepped in.
Well, they sold here, so that's what I look for when I look at resistances. When the ask comes in, I'm looking to see if that bar is inflated here, and then do I see a little red number here, meaning aggression, like an imbalance, and then the price went lower. So Nesty asked me, how do I determine a trade off of a support or a divergence on delta? Well, I look at the ask, if the number for the time frame that you're on, and this is subjective, right? Some of you guys use 10 minutes. Some of you guys use like 5 minutes, right? And you have to get comfortable on 5-minute footprints, for instance. What is a normal on ES? Based on what I've seen, anything between 100 and 150 is not bad. Once I see like 400, 300 at the ask on 5 minutes, it's telling me that somebody else is entering the market too. So if you're at the resistance, oh, sorry, I thought I had the pen. If we are at the resistance, I'm looking first to see ask, Is there a number being inflated there? If we are seeing that there's limit cells getting filled and then followed by aggression at the bid and price goes down, that tells me the limit cell was there, but then somebody was eager to accept prices lower. So how do you determine aggression, right? And the market is, if I'm a seller and I said, I want $200 for this product, and I get that fill, and then quickly the best bid that I'm getting is 195. Now I, as a seller, have a dilemma. Do I accept 195 because that's the best bid? Or do I wait for 200? So I become an aggressive seller when? How would I become an aggressive seller in that scenario? My initial ask was
Market
200.
sell?
Yeah, you take the loss, right?
Well, if I sell below 200 now and I accept the 195, well, think about yourself. You're selling something on marketplace. Let's say you're selling a lawnmower for $200 and the guy comes, it's like, I'll give you 160. You say, I don't want it. And then 2 weeks pass and another guy offers you 160. Is the market telling you something?
Yeah, 160 is the fair price.
160 is the best bid. So now as a seller, if you accept that, that makes you what? A passive or an aggressive seller? That would be an aggressive seller. So that's why I look at the ask, see if there was limit cells that got filled. And then if there's no more buying, meaning aggressive buyers offering the highest bid at this level, then I look to see if there's bid that's imbalanced and the price reacts lower. Remember, market profile and any other tool is not really the sole thing that it's not a magic ball. You have to look at it in context of others. What happened before at that level? Did they absorb, they sell? And that's what makes, especially market profile with footprints really powerful to understand what's happening in the market. So here we expect responsible sellers to come in and drive the price. Selling below the value, right? If you sell below the value, that means initiation in the market change sentiment, and you need volume. And volume is the only thing that validates the auction. What I mean by that is if I want to sell that lawnmower and it's 6 months sitting at 200, how well am I facilitating trade for my business?
Not good.
Well, and then let's say I have 150 lawnmowers and I have them sitting at 200 and I had 2 sales in 6 months. That means the price that I'm asking for is not in the value. There's no value in asking 200. I can stay at 200, but I'll never get a buyer unless something changes, right? Recently, I don't know if you guys pay attention. You guys know I'm a nerd for grass. Honda lawnmowers said that they're not going to make small engines anymore for lawnmowers. So what do you think that did to the used market of Honda lawnmowers?
Prices
It went up.
Grease.
The prices increase because now you're not going to have a new supply. What you have out there in the marketplace is going to go there. Well, I happen to have 2 of those lawnmowers and I don't need one. So I was trying to just get rid of it and sell it. And the guy offered me to kind of exchange with him for a Toro lawnmower, basically no money exchange, just product for product. If you're in my shoes, what do you do? I'm a seller.
Deny it.
It doesn't matter what kind of lawnmower the Toro is, might be better, but the perceived value of a Honda now is much higher. I can buy a Toro at any point, any model, anytime.
Can't you just wait?
Because the supply is there. So what I told the guys, sure, I'll give you the 2 tires of the Honda lawnmower for your Toro, because I have 2 spare tires. There's no value for me to replace it, to exchange it with him, because I understand the environment changed. And same with the stock. We can trade at that price until something changes, the environment changes, right? And it's almost like always the market is driven by news when it hits certain levels. And, I strongly believe in this. When market comes to a level, news start popping out, right? Recently, when we auctioned lower from the recent all-time highs, there was, the scare of whether it was the war, whether it was the rates, the Fed cuts. But usually something sparks that, and people look for selling or buying at certain levels based on where the price is. So identical behavior happens in a stock market, and you just have to think about price and value. And the volume is the only thing that confirms whether the auction is healthy or not. If I drop that lawnmower price to 150 and a lot of trade facilitation happens, right? I get a lot of participants to buy. I can slowly increase the price and see if these people are going to follow, right? Is the price chasing value or the value chasing the price? And that's important, right? That's super important to see, because that's how companies also maximize profits, right? I'm not sure, like Netflix, right? It used to be back in the day, I believe it was like $9. Then it went 14, then it went 17. Now it's what, $25, $30 for a Netflix account. And the only way you will not keep Netflix is how? Why would one get rid of Netflix?
If the price
It's
is
not
too
value
high.
to them anymore.
And for price not to be valuable anymore, what would you need from the market participation to happen? What would help you make that decision to cut Netflix?
Maybe other streaming services.
Somebody said it, competition, other streamers. So now you think about it, right? You have Apple TV, you have Hulu, you have Amazon Prime. I don't know all of them, right? There's a bunch. And every one of these streamers enters, but then your question is, does Netflix provide the same value as these guys? Or do you need two of these guys to make up the value of what Netflix does? And Netflix uses that to advantage, right? By providing new content, being, exclusive to certain things that others can't afford or want to do. But at the same time, as they're pricing these people out, maybe their margins are going. So the fundamental investors are like, oh, you just keep offering this and you're causing more, cost for yourself. Then the question for Netflix becomes, I'm expanding, but is the expansion resulting in what? More money, more transactional volume. If there's more members now entering and buying, like Netflix showed, more memberships, is their move validated by transactional volume? If they got more members, that means the auction and then the business change they had is being accepted by the market. Is that correct?
Yes.
If their memberships fell year over year instead of the growth they had about 18%, that means that they're being rejected, and Netflix will have a different problem and a strategic decisions with their leadership to discuss what do they do next. And then they look at the segmentation of the markets, right? The APAC, the America, Latin America. They look at that and they're like, okay, well, let's see which one is doing great. And then you see different prices for different regions, right? Because they're trying to find a fair value and what are they willing to accept and still continue growing. So in the stock market, if you're auctioning higher and you're noticing the volume is not there, the trade's not being facilitated well at the top or the bottom, that means something, is coming to an end. And that's where market profile helps you define that by certain rules of the access, the rotations, right? And that's what we're gonna kind of get into now. So everybody okay on market auction? I know it took a big chunk, but understanding the purpose of market auction is probably the most important piece for a lot of you guys. Because I honestly think a lot of people get into the trading and they don't understand, who's buying, who's selling. People think that locals are the one making money and making directional moves. The locals, the dealers, what do you think their role is?
Liquidity providers.
They just provide liquidity. They do nothing else but provide liquidity. And if they're the liquidity providers, there's instances when their inventory levels might be wrong or maybe too exposed. And that's where sometimes you get those quick flashes of up, down, the inventory rebalancing of the dealers, the locals happens. And most of the time, the dealers and locals and the retail, they love two-sided activity because that's where the highest amount of volume happens, right? And the volatility is low. When the volatility is low and the highest volume is there, The locals make a lot of money because they make money on small transactions. They buy for 5 cents here, they sell it for 7 cents here, and they do it, 1,000 times. Dealers don't look for one trade like other time frame buyers and sellers, long-term buyers and sellers. They look for a lot of transactions and collect the fees, 2 cents on millions of shares or transactions, and they collect their money and then they hedge themselves, properly. Okay. Market profile. So update on the tapes. I did get an update from the tape company that's converting them. So it does take, they said, another 4 weeks to get that tape fixed professionally. So I'm kind of waiting on getting all of that back, and I'll definitely share with all of you guys that class that basically Peter Stadtmeyer conducted the class in 1985 for CBOE. And that's the class that I have recorded on tapes, right? And considering we're in a 2024, not many tape recorders are existing, and the quality of the audio can be improved, and that's what they're doing now. So they're going to improve the quality, and they're going to give me the USB, also cloud and CDs, and I plan on uploading that to YouTube for all of you guys so you guys can have it, and then you will hear it from the guy that invented it, all right, and how he trades. He also has the tips and tricks on one of the tapes where he goes step by step on how he looks at it. So I think he'll be a really good complementary tool, and you guys can kind of listen to it in the background and understand from somebody that created it, right? And I think it'll be really, really valuable for most of you guys to hear it and understand it, and the reasons why he came up with the idea to use the visual representation of the market of price and time and volume for confirmations. Market profile is not a tool or a strategy that you guys would use. Some of you guys are, let's say RSI and MACD people. Once it's below a certain level, they say it's overbought or oversold, and they do, what's needed to do at those levels without thinking what the market's telling them. EMAs and SMAs, right, that people use, those are all lagging indicators that's based on historical data, right? Market profile generates time historically. When the day closes, they tell you a lot about the day. As you guys are able to assess lately, I've seen progress. But then during the day, the market also auctions in between, whether it's initial balance or extension of those balances or single prints when they occur. But they give you information on who's entering, who's not there, what's happening at the market at that time is also being provided by market profile. And looking at let's say a candle or an EMA for the day, I don't think it can give you much information. It's just a line or a candle itself. You really don't know much of the internals of what's happening in that auction. And that's what market profile will be able to tell you, is understanding, really the two big questions. Which way is the market trying to go, and is it doing a good job getting there? And I think market profile is the tool to really, really tell you that. Auction, I mean, this is the three components to it, right? And any tool that you guys use, whether it's Quant Tower or whether it's Think or Swim Monkey Bars or Sierra Chart, whatever you're using for market profile, TradingView now has it, and I forgot to say, but I know they changed the plan, so some of you guys don't have it. It has three components: the price, time, and volume. And the key, concept of market profile is price and time. Is how much time was spent at a level, and it's used as a regulation of opportunity, right? Just like we talked about, iPhone goes on a sale at $200. It's not going to stay 200 for a very long time. First of all, Apple is not going to have inventory potentially to support all the sales, and they don't want to sell it so cheap. Maybe it's below the cost. They do that to, find the buyers, and then they're going to slowly increase the price, just like Netflix did with their products, right? They slowly increase the price, and they keep finding new buyers as long as the perceived value is matching. So time is used to regulate it, and for us traders, the daytime traders, somebody mentioned, I don't know if it was Mr. Bean or somebody else, towards the end of the day, like, is this a good buying opportunity or selling? And considering we were like 10 minutes before close, not many, decisions on a daytime traders will make 10 minutes prior to the close. Could other time frame traders use that opportunity if the price drops below value or not, and buy it because they believe perceived value for a longer time frame is cheap? Yeah, of course. And then you'll find out in the next day, right? On confirmation. But time is really an important aspect for TPO, and that's what it's used in measuring the POCs and value areas and lows. Price, I mean, this is your, if the price doesn't move, you would not have much change. But without price, time, and volume working together, you would not have anything. People always say price is the one that pays. Well, I can keep the lawnmower at $500, but is the price that's going to pay? Will I ever sell the lawnmower and make money? Well,
No.
if the perceived value of that price is high, price will never pay. The value will pay. Because if your perceived value of that asset is overpriced, you can sell it all you want, right? And lately in the crazy market that we had in 2020, people were selling crap that was so overpriced that it created bubbles everywhere, whether it was a housing bubble, I mean, or a car bubble. The people were buying and selling. I mean, Tesla alone, just think about Tesla and Elon. Some Tesla 3 owners paid 55 plus K for Tesla 3. Well, after many cuts in Tesla, you can buy a new one for 30K. So those people that bought a 55K, first of all, they overpaid by quite a bit. Their car depreciated $20,000 in just a matter of a couple of months. So the perceived value was high. For Tesla, they had really high interest to sell above value because their margins were much higher. And now that they're selling lower, they might be selling higher quantity at 30, but their margins are squeezed, right? And that's where businesses make decisions on what they want to do. So price is really a discovery tool. You want to see if the price that you're selling something is going to be there or not. Is it going to be accepted or is it going to be rejected? If it's accepted, you should have volume, right? That means people are going to be buying and selling from you. If you're not getting much offer, if your ask is 600 for that lawnmower and you get 0 bids at that, well, should you lift the price higher?
No.
You would be an idiot to lift the price higher. If you got 0 bids at 600, your goal now is to find the buyers. Whether you drop, every day $5 till you find the buyer, it might not be enough till you find a good spot. And some people test the prices, right? There's price mechanism to test. If I drop the price here, what's going to happen? Well, they find the value is going to be, and people do marketing surveys and such, right? To assess what is a fair price. So a mechanism in stock market is if a price goes to a level and we see that the buyers are stepping in or sellers are stepping in, then you got to think about, okay, where's the value? If sellers are stepping in and causing a tail on the top, selling tail, that's telling you the perceived value right here is pretty high. And we have other, participants entering and driving the price back to the value that's somewhat bearish, and it gives you clues, right? And we'll get into that. Without volume, honestly, you can't tell how well you're auctioning. So the two question is which way is going and how is it doing? Volume is the one that tells you how it's doing. And there's 2 more components that tell you that we'll cover, but volume is the biggest piece that tells you that. And you guys see it, right? I mean, you really have to start believing in TPO and especially volume profiles to really see the beauty of trading. The only thing they can't hide in the stock market is volume. They've done a lot of stuff and, legal changes and regulations that help them, right? Like, the block trades and such, right? Off the market hours and the private networks, but they still cannot hide the volume and the intentions, right? So these 3 components really are the value. The price, time, and volume is the value for any asset. These are the 2 questions, and I'd like for you guys to start thinking about this, whether it's, again, what time frame are you, right? Some of you guys that, that I've talked to you even in 101s, we have somebody in our group that's a CFO of a really, really large alcoholic company, right, that makes wine. And I talked to him and he's like, well, I just don't have time to look at the charts every day. So most likely that person should not be looking at daily profiles whatsoever at all, right? If you want to make decisions on your trends, and if you're a long-term participant, for him it's more like 3 months, stay in a trade. Well, he can use monthly profiles for that case, right? And determine which way is the price trying to go on monthly profiles, and is it doing a good job in attempting to go that way. How would you guys know on question 1, using market profile, what tools could you use to know which way is market trying to go?
Volume profile.
Let's stick to market profile. How would you know file which way is market going?
If we're framing up or down,
Like, yeah,
Okay. Anyone else?
If we break IB, either higher or lower.
Okay, that's true. So one of them is range extensions, right? And make sure you guys understand this. Your range extensions, the IB high and IB low, IBH and IBL, do you think they're set by long time frame participants or short term participants?
Short term.
Short term.
long term.
IBs are set by short term, the locals and the retail traders. What breaks the IBs?
That's what I meant. That long term breaks them.
Long-term participants, meaning other time frame people, are the ones that can move the market. Remember what I said earlier about the locals? Do they do 1 or 2 trades that are massive, or they do many?
Many.
Many.
Many. So their interest in price discovery is what? Not much.
Very low, yeah.
They have no interest to do the price discovery beyond value because they care about volume. They want to trade where the volume is. When you have single prints, that indicates what? If you have a single print in the middle of a day, in the middle of the session, what would that indicate?
Aggressive
Long term.
buying or selling.
Aggressive buying or selling. That means the aggressor showed up and he believes or she believes that the value that they traded in before is no longer there. And now they're trying to auction, whether it's higher or lower, but they're the one that's being aggressor. So most likely those are the initiative buyers or sellers. And 90% of the time, that's your other time frame people. Because as a local, dealer, I care about the quantity. Does everybody understand? Can you relate to the local and what? Give an example of what the local is in a day-to-day life for you, especially new folks. Do you understand the dealer and the local? What's their purpose?
Create a market, right? Buying and
Yeah.
selling.
Yeah, I mean you have the dealers and locals everywhere. When you go buy a car, who's the dealer? And who's the
Dealership, and
Okay.
then the manufacturing company is the other time frame sellers, and then people in the market to buy it is the other time frame buyers.
So the consumer is the other time frame. Long-term buyer is a consumer. A long-term seller is a GMC. And then the locals, the dealers, are the dealerships that are selling that. So they're the middlemen. They buy the car from GM. They obviously lately I don't know if you guys been to a dealer. I went to look at a GMC Yukon for a wife recently. It was $120,000, $18,000 in add-ons from the dealer. Protective paint, $7,000. This special covers on the bottom, $1,500. They added those fees, right? Because they're a dealer and they're looking to do what?
Get their cut above
Make
the
more
cut
money.
car.
Yeah, they're trying to get a little piece of the car. If they have 100 of those cars and they make 18K on top, what they got it from the GMC, now they're making money. That's called being greedy and being pigs. But pigs get, they get slaughtered. So if they bought a lot of inventory from these, let's say, suppliers like GMC, Honda, Toyota, and now they have a lot of inventory sitting there, but the buyers are not appreciating the price of, inflated prices, what happens? What does the dealers have to do?
Drop
Yeah,
the
lower the
price.
prices, sell it lower.
Yeah, that's the concept, right? Same concept. Auction steps in and now you have to wait, right? I offered them for a brand new Denali one, I offered them 68,000 cash and they said, you're crazy. I said, no worries, you're gonna call me. You're gonna call me when you need me. And the guy said, we won't need you. I said, no worries. They called recently, they asked for 76. I said, nope, 68. They're like, we can't do that. I was like, don't worry, man, you're gonna call me. And I promised you they're gonna call me. As their inventory aging is there, right? And the cars are gonna be produced by GMC next year and so on. They're gonna have an incentive to sell the old inventory and bring in the new one. And that's where I come into play. And then my bid might change based on the concept, right? So if they were trying to lift the prices higher and they're not getting, volume, they're not getting buyers in the way they're trying to go, that's a good sign, that it's not doing well. That would be the question too, right? The volume becomes super important in assessing whether is it doing a good job to get there. First one that you guys talked about here would be the IB. If we have extensions to the upside, let's say in a TPO period, right? We have let's say A, B, C, D, and E, all are spending time above IB. Is the trade being facilitated in the direction of the IB breakout or below? If it's in the direction of the IB breakout, that means the prices are moving easier above IB and they're being accepted there. Right. So facilitation of the trade is better in the direction of the range extension, and that's a good thing, right? That would be one way to tell which way is the market trying to go. What about access? Does anyone know what access is? Is anyone that doesn't know what access is? Because you're gonna learn on the next slide, but just want to see who doesn't know what access is.
I don't know.
I don't know.
I don't know.
Oh, beautiful. Let's go to the next slide. I pressed the wrong button. Okay, so let's look at the single print, a volume profile, and then I'll give you guys a different view of this. So when you have each letter that you guys have here, like you see the A's and the B's, each one of the letters represents 30 minutes. And what that tells you is, for instance, here, letter A, if you guys look, the price is traded from, let's say if this was $10 on ES and $4. That means the A period range was between 10 and 4. That means for the first 30 minutes of the stock market, we traded in this range, the top and the bottom. Then the next 30 minutes went here and made a lower low. It went below the A. And the A and B together, that creates initial balance. Initial balance is 1 hour. When you have TPOs or periods, these are called TPOs or periods, when you have 2 or more periods at the top as single prints, meaning that there's no letters next to it, like you have on the bottom here. You see how you have DU and V as in Victor on the bottom? Here you have 3 flat, meaning they're next to each other. When you have single prints occurring on the top or the bottom, that means what? That's your
Initiative selling.
access. That's initiative selling. This means selling tail. If you had the opposite here, I didn't have an example here that I added, but if you flip this and you have single prints on the bottom, that would be your buying tail. Okay. So access high or selling tail, and the bottom would be buying tail or access low. When the price reaches unfair high, right? So I'm giving you all different names, as you can tell on what it's called, right? So you have unfair high, that means they're going to drive the prices, from there they thought the prices were too high and you expect the sellers to come in, and sellers come in and create a selling tail. That means other time frame sellers stepped in as they perceived the price to be too high. Okay. And the same thing happens on the bottom. When you guys, when price goes below something and people step in to buy, you'll have a buying tail, and you usually want to mark, and we'll go into the live to show you. You want to mark these levels where this happens, and there's different scenarios we'll cover in a live session. What that means, right? The absorption of the access, and how do you play it? Does everybody understand access now? If you don't, that's okay. I can explain it differently.
Shorty, I have a question.
Hmm.
When he created market profile at that time, because features market was more commodities, right? Corn, orange juice, whatever, probably notes as well. The movement was not that big. And at that time, maybe the movement is 32 ticks in a day, and he created like 2 ticks is the excess because relative. NQ these days goes probably 300 points, like which is what 1200 ticks one way or another way. Then wouldn't that 2 TPO thing should change based on the market you trade?
I think that's subjective. I think you're talking about the range and the size of the TPOs or single TPOs. Is that correct?
I'm talking about calling 2 TPOs as excess. And he
Well,
can create excess like probably every time because of the range it has high to low during the day as
yeah.
compared to when it was created.
So, and I think that's something called market adaptation, right? When the rules and market profile came out, when Peter published it, they considered based on the studies and statistics when they went, they're like, well, it has to be more than 2 PO periods because typically it doesn't encroach when you have two. And that's how they established the two. If the people are to do the statistics again in a study over, let's say, 1,000 sample days, and that changes to 3 TPOs now because the market itself changed. The more retail is there, we're trading 24/7. That could be the case, right? And the more TPOs you have on single prints on the top or the bottom, the more aggressive that side was. So whether it's 2 TPO, but you can still use the relative component of strength. If it's 2 TPOs, would you treat it the same as like we had on one of the days, like 6? Probably not. I mean, the aggression of those 6 is much greater because they were quick to start selling from that price and drove the price lower. If you see 2 TPOs and a day prior had a single TPO, had a poor high, well, I would most likely consider that 2 TPO to be the poor high as well. So sometimes when it's 2 TPOs, I look at it in coordination with the day prior and what that price action is telling us. So 2 TPOs is the benchmark. And sometimes 2 TPOs for me is a poor high. If it's 3 TPOs and you see the axis is building, then of course it's a selling tail or buying tail. But 2 TPOs, the subjective start for the axis.
Thank you.
Yeah. So that will be the axis on the top, and then I listed the periods here so you guys can kind of follow along, right? So your A period starts 9:30 to 10, and then the B period's 10 to 10:30. These two periods together create what? This is your initial balance. So right here, you guys will have initial balance. And in this chart on TradingView, there's a little line that denotes that, right? So you guys see this line here. That means for A and B period, this was the initial balance and what where they found the two-sided activity. Any break of range extension, like we said here, is telling you which way the market's trying to auction. If you go above IB, let's say we auction above the IB here, and then you have single tails that comes in here above the IB, let's say here, I'm sorry. You have single tails that are here, single prints that are sitting here. What would you make out of that IB extension? We tried to break it and then you have single prints and it drives the price back in. What would that tell you?
Strong
There's
rejection.
aggressive sellers there.
Yeah,
Okay.
sounds like.
Now think about the two questions. Market is trying to auction up. Then the second question you would have, is it doing a good job?
No.
So
No.
in the first question, you would say market's trying to trending up. Is it doing a good job? Well, then you would look at which components could we look for question number 2 to determine that? Well, one,
Maybe access.
you will look at the axis to confirm if it's being accepted above that. 2, if it broke out with no volume on this IB, and then the volume at the prints is pretty massive, that would be a, Is it doing a good job? The volume would say no. What about value area?
If it spends more time above, maybe they are trying to stay there.
That's correct. If the value area placement, let's say we are breaking higher, but the value area is staying lower and the volume is less, is this directionally strong or weak?
Weak.
It'd be very weak, right? So the three components that tell you on the question number 2 is volume, is the value area placement. Are you higher or lower? And there's overlapping higher, lower. And then you have the outside and inside. And then the value area range is another component. Why would the value area range be important? The width of the value area. Why would that be directionally important to see if it's doing a good job?
Is it determined like the wider it is, the less chance it'll be broken? And vice versa, the smaller it is, the more chance it'll be broken.
Okay,
They're kind
anyone
of
else?
they're kind of
It
seem to
also
be somewhere.
shows it shows different time frame players like long term and short term.
That's correct. Anyone else?
I was thinking maybe they're kind of showing more business being done up there. Trying to find balance.
Okay, that's good. So all
Is
those
it
points you guys said are correct. I mean, when you think about it, narrow prices indicate a poor facilitation of the trade. You can't have a lot of volume when the value area is super tight, because you're not going to have a lot of prices and opportunities for other time frame participants and many participants to find the price they like. So if the value area shift is narrow, that's not the best for the market because that's indicating a really limited number of participants. When you have a breakout, you want it to be, elongated profile. You want to see a P shape pop out, and you want to see, value area low stay somewhere on the bottom, and then it shifts towards the end of the day to the top bracket. So the value area needs to shift from the bottom and catch up with the price. Once they do that, then on the P-shaped profiles, you would look for continuation to see if out of that value area and the top distribution and P-shape, are we going higher? If they fail to hold, let's say, the distribution, then you're looking for HVNs below to see what, where did they reaccumulate for the first time? Does that make sense? So 3 components: volume, value area placement, value area width are like key for number 2 question. For number 1, you guys nailed one of them, which is your range extensions. Then we also said the long-term, the access, the single prints that come in, right? One more thing that I mentioned briefly to you guys before is the framing. Do you guys know what I mean by that? Framing within the day.
no?
No, I always hear it, but no, no idea.
Okay, so when you have framing, let's look at the next slide here. So when you look at the next slide here, how many framing ups do you have on TPO periods versus framing down here? Does anyone know? How would you count that?
Kind of about overlapping. If
I
it's the next one is higher than the previous one, it's up. And then at the bottom, if it's lower at the bottom, then it's framing down
Yeah,
versus the previous one.
and you guys mostly have that study if you're using, let's say, Sierra or Ninja or Quant. It's called a rotational factor, right? How many TPOs are making higher highs versus lower highs? It tells you intraday, who's in control. If you're making higher highs, for instance here, A put in a high, B put in a lower high and a lower low. Then you have a C that put in a higher high but lower low. So what happens with this one? Is this inside or outside?
Outside.
This would be outside. So this one is not really giving you directions, but it's making higher highs. So you would get, plus 1 here on the higher high. You would have +2 here, right? And this one is -1. This one here is -1. You would total these and see what the rotational factor is, a plus or minus.
Wait, what's outside?
Well, the candle here, the C period is outside the B here. This is B low, B high, so C went outside both. If it's
Gotcha.
inside, it would have been formed here. Okay. That makes sense?
Mhm.
And rotational
Yeah, okay.
factor, when you guys look at it, right? So when I pay attention to it, when we're trading, for instance, if you guys look at this A and B, and I kind of wrote, you know, everything that I was thinking here. When you have A and B, this is your balance, this low line. And you see here, this is called a poor low, right? It didn't go 2 TPO below to show the aggression and buying below. Then you see here in the E period, what did they do? They cleaned up that, right? They cleaned up this poor low and they went lower, they auctioned. Then they are trying to formulate, see if they have value here. What happens next is that you have, you know, the F period continued and put in a lower low compared to the E here, correct? Right? And then you see in the G period, something occurs. What is it that occurs in the G period that all of you should pay attention to?
Excess.
There was
Excess of buying tail.
That's the access and the buying tail. And this profile is called, you know, I believe in TradingView, what is the, I don't know what they're calling, I'll show the settings, but basically it's a broken up profile, while this is your composite profile. This profile here is this profile there. It's just that it's broken by TPO periods on 30 minutes. You guys can see how the price went and where. The more price touches the point, like this one, that's called POC. Most of the time, the price spent here, and that is considered the fairest price currently. And then the dotted line here is called value area high, and the dotted line here is called value area low. So when the price goes above value area high, you're expecting to see what that showed up here.
Responsive sellers.
Responsive sellers showed up here. And as soon as we established this value here, they basically said no more. So it seemed like it was going to be a value area high because they're rejecting here. Now, if you look at, you know, go on and let's analyze. So the G period had access here of 3 TPOs. So, and if you look here, that's the 3 TPOs, 1, 2, 3. So it qualifies as access, right? That means the price was unfair and other time frame participants bought it. When you have access high and access low, what do you think the auction is going to do next?
Look for fair value in between.
Find balance.
It has to find exactly fair value and a balance in between. So if you see us, you know, let's say we, you know, here we rejected, we never really cracked again. But now they're trying to say that the other time frame seller stepped in here in the A period. They reestablished the price is not fair in the D period, but they also said in the G period here, the price is also unfair low. So most likely they're going to go and play in between till they find value. A break of this D high or G low would mean what?
What, they didn't feel it was fair value, so they broke it.
Trend
And
day.
most likely is going to be trending in the direction that it goes. If they're able to break here or here, most likely it's going to go that way. Well, now when you think about this, question I have for you, now that you see this, what do you think happened the next day?
You test the highs and the lows.
It went lower?
Whoever says something, I want you to tell me your thought process why you say that.
Well, if it
I
goes
would think
higher,
maybe,
if it goes
I would
higher,
think,
I'm thinking if it goes higher, maybe those sellers come back in and defend the price down lower. The same thing on the bottom because both sides had excess.
Okay.
I'm seeing more action in the lower action part. So wouldn't it want to find fair value, and then because there's been more auctions down lower, it would travel low
Okay.
after it's found fair value?
Very fair point. Anyone else?
Yeah, I would say that because you have a long tail up top, you have aggressive selling, moving it from one direction to the other. Failure and closing below the
Yeah, like,
POC
at least
indicates that it's
resistance.
going to continuation on the downside.
Very good. Let me add one more component to you guys. This access high happened above a 2-week value area high. It breached the bracket and then we got the access of A. Does it give you more clues on what's happening?
Yeah, they don't want price higher.
Sellers in control.
So that means that we went above a 2-week value, and once they represented that, right? So if you were to go back into the what we talked about here, they traded, they went above, and once you create access above these bracketed markets, that means other time frame participants still are there and they believe we're still in the bracket that's most likely going to go first POC, second value area low. And this happened just 3 days ago. So this example here, if you guys don't recognize this, I promise if you go back to your ES and you look at this profile, you'll find it within 10 seconds. This was the sell-off day, and then they had the spike, if you guys recall, spike back when they reclaimed quite a bit of points on the sell-off. Then they continued the next day and they sold off because this excessive seller was fairly strong, and they reestablished in a D period that this was, this is enough. So now the crack of D period was the reversal for the bulls, and they're going to work all the way to the top of that. So they had to reclaim, above this level and build value here in order for you to play that area. Once you're on the bottom and the G period took over here, any break below G period was pretty good sign that the buyers that were there got absorbed and the sellers were too much to handle for the buyers that were sitting there. So that means, these limit buyers that were sitting here were met by aggressive sellers and they drove the price lower. That would be selling a bid and these people are buying, right? But it's not working, so the price will go lower. Here, if this was the value that they established, where would you guys go long in this scenario?
The value area low.
Okay. Now think about the framing down, right? So the E period broke this. I would say the C period here. And the reason why I say C period is because this is one TPO below, and I would consider this to be inclusive of this range just because it's poor low. AB is the true initial balance, but I would not, this has to be fixed, and they fixed it. So now when you think about it, E period broke F period. Once they reclaimed the low of the F period here, that means there's a potential for a change. And this here gives you a little bit of confidence. So where could you go long?
Didn't you go long on the test of G period, the excess tail, so I period?
Exactly. And you could go there or H, right? Dependent
Risk.
how it looked and risk, but this was good. And if you took a trade, let's say you took this trade here on a retest of this low, your best stop loss would be slightly below here. So this would be your what?
Risk, reward.
This would be your risk. What would you target as your reward? Think logically.
The POC.
That's correct. Why would you target the POC?
That's where most of the trading has been occurring.
That's where the fair price is. So there's a high chance that, if they did not find value here, first they will come into initial balance and see, hey, are we agreeing here? They will reclaim it and most likely they'll go here. And then some people, when you trade, you see the value area high was being set there. This D print here could be your target. Right? I'm trying to draw a straight line, but I'm horrible. But could be the target. But always you want to take off somewhere where somebody finds something as fair price. So if you took this long here, your risk is here, your reward is this area. And a lot of you guys make a mistake and move this risk. It goes here and you guys move it and then you don't see this play out. Two reasons for that is your size and your confidence. If you want to be a trader, once you see these things, you have to let them play out. You don't need many trades to let them play out. Are there opportunities where you can scalp? Yes, I scalp a lot. When I make money off of a trade that planned and worked well, I switch to scalping. Sizing on the contracts goes to 1 or sometimes even lower on M&Q. And then me on Friday, 200, 100, 50, 30. As long as I'm not losing on these scalps and adding against my profits, I just take small chunks based on the price action that I'm seeing. But once you take these plain trades for more points, right? If this is your trade here, you're taking this, you're targeting the POC, you just sit and wait and let this trade do a majority of your work and make most money. And then if you want to trade, and if you're confident and understand scalping, size down and let them play out. But this here, don't go massive size here so that as soon as they go here, you start shaking and you start closing prematurely. And then, you know, like here, let's say you took this trade, you got a little drawdown, they went inside and then they spiked higher. So size positioning is probably the most important if you guys want to see these trades play out. Okay.
Can you explain why H or I to go long and not G?
So the G period is still developing. You wouldn't know where to go long. And you need the validation that this is single print. The other prints, first H said that this was your, you know, the lowest of the G, but this is the level where it was initially your tail. And then I period took 1 TPO away, so you're left with 3 TPOs. So the next period's confirmed that this is your axis. If this I period went as low as G, what would it tell you?
Get out.
Get out. Sellers are being absorbed.
Stop loss.
I'm sorry, the buyers are being absorbed. So that's why you waited for either H or I to get in. And then the G becomes your low, meaning the stop loss below G, that's your target. Does that make sense?
So in real time, you would kind of wait close to the end of the H period?
Yeah, at the end of the H period, right? And especially, yeah, I always identify, and you guys see me drawing those dotted lines on the charts. I have the dotted line and I draw it, right? And I'm looking to see how they're going to respond. Like NQ between Thursday and Friday, we drew the, you know, on a double distribution, we had the level the bulls must hold and the bulls are defeated levels, and they perfectly bounce on the bulls must hold level, because that's where the aggressive buyers, emotional buyers set up the single prints. And if they crack below, let's say that, you know, this area was the single prints here. If we are able to absorb these single prints, high chance that you're going to continue lower, because this break here requires a lot of initiative and volume because these people left the axis initially. So if you want to play with the market, right, and how they're behaving, I can take this revisit here, intraday here, because I'm expecting these other time frame buyers to respond. And when they came back in I period, they responded. But they did not make a lower low. They made a poor low here, right? In this aspect, they made a poor low here. So most likely this is going to be revisited. But now you're just enjoying the trade till you get to the fair price and you close here.
And sorry, can you explain the concept of poor low too?
Yeah. So the poor low, if you guys look here, if the single periods, right, like here, the selling tail is when you have 1 TPO, 1 letter on the top. A poor low or poor high is where you have multiple periods next to each other, multiple letters next to you, 2 or more letters next to each other is called a poor low. Means the auction did not finish properly. In auction, you have to have a winner, right? Or somebody that closes that. If you're bidding for a car, how long is the car auction going to last?
Until there's one person left who wants it at that price.
Exactly, and then the auction is completed. And in that market of the cars, they have to bring a new car. And when the auction is completed, you have single TPOs, right? That means the trend potentially is reversing in a different direction. When you have unfinished auction, like where you have multiple TPOs, that means the auction has to come. We have to come there and finish the auction and identify that we have a buyer or seller that's finalized. Okay, does that make sense?
Mm-hmm.
So
is poor low high the same as failed auctions?
That's correct.
Okay, thanks.
Yeah, failed auctions, poor lows, poor highs are same thing, failed auctions.
So then you need a single print to show that it was completed. Like
That's
single
correct.
print below or above where the poor, high, or low was.
Yeah, like here, you would have single tails, and then the next slide, that means that this auction here was completed and other time frame people stepped in. When you have single tails like this, that means end of an auction looking for a new one. Well, you're looking for a new one and the auction started and it went up. This was the stop of the auction of the previous one. You stopped, other time frame buyers stepped in, they reconfirmed it and went higher.
Oh
So
yeah,
then
I
that-
noticed a lot on the charts. As soon as that auction is done, it's like they continue business.
Yeah, and that's just the way market auctions. It goes up and down in search of buyer and sellers. Once it finds aggressive buyers that are below value, they're going to drive that price quick because they come in and they snatch up as much as they can of that inventory when it's below value. Okay, so does that make sense?
real quickly, if you go back one slide, so then is it L and M? So L and M, is that a poor high then?
Yeah, that's definitely a poor high.
Cool.
Yeah.
Thank you.
But it's also a poor high that's being met by access from what?
From the D period.
From the D period. Therefore, that's a level where you're looking to potentially short, and your stop loss would be what?
The
Above
D
the
period.
Above the D period. So here you had a long opportunity, here you had a short opportunity, and that's two trades the market gave you. If you're trading in here, you're scalping. If you're trading in here, you're scalping, right? So now think about value. The value was accepted first here. Let me erase this. There was different values being created at that time. So you had value that was here, and then that value shifted down. At the bottom of this value, you found other time frame buyers that disagreed with that value, correct? Here you had people that disagreed on the price at this value, so they auctioned lower in search of buyers. They came here, they found other time frame buyers. They said, no, the value is not here. Let's test the extreme of previous value. Because if you break the previous value area low, the 80% rule says you go to the top of that value. And that's exactly where they went. And this occurs nonstop. And depending on what time frame trader you are, you're looking for trades and the time you spend in them.
So would you not need a period after LN8 or LNM to do a single print to complete the LNM poor high?
LNM is the poor high. This here, the two TPOs matching, this is poor high for intraday structure here.
Would you not need a single print after that to complete that auction?
For this section, yes, right? But we already completed the auction in the D period that we said we're not looking for more auction higher. They said this is the top
Okay.
here. Because if they're able to break this, that means that they are going to go much higher because that would need initiative activity needs to occur to crack this. They're telling you here, access here, we want the prices below. And now till the buyers are found and they're basically auctioning, it's called negotiation, right? They're negotiating back to find the value in between. You can't look at necessarily, is this going to be revisited? LNM, right? Intraday might, but that's where the time comes in. M period is your last period of the day, right? It's 3:30 to 4, as seen here. So you can't really rely on this period to tell you if this is access low or high, right? In that case, because M periods need to be revalidated the next day, and that's used for spikes. Okay.
Got it.
Hey, Shorty, if you can go back to that slide again. So
me see.
here, let's say during the day, it's H period, right? It's between 1 and 1:30.
Mhm.
And you've seen G period, and it went, it's basically formed an excess low there. And so you're waiting as the day is developing, you go developing the value area, and it comes down to I period. So you're right below the H price. So go over that scenario again where you're entering a long and your risk reward, I guess we're looking at footprints at that point, right? We're looking
You
for.
are, yeah,
Okay.
you are.
Oh.
You're looking to see here and how well is it doing directionally to get here,
Mhm.
right? So when the price was initially here, right, when the price was trying to auction lower, it got stopped, meaning completed auction. It's a start of new auction. That's one, right? So rotationally, there's auction end coming here. Two now is that you had, unfair high here and unfair high here. So we know most likely they're going to say that this is going to be the high unless we get initiation and we pump, right? With the IB being set right here. So initial balance is here. They're trying to break this lower, and they do. So the day is starting to be directionally, they are trying to auction where?
Lower, right?
Lower, right? Now, when you think about it, and the only reason why we auction lower is why? Why do we sell?
They're looking for buyers because they can't get enough volume of
To
sales
start
at the higher
selling.
price.
Yeah.
Here they said, and that's why it's important, the market profile, we found it. This is your we found it moment. And as long as, this here does not crack the low here, that's not a bad opportunity to go long.
And each box is one tick, is that correct?
That's correct in this case.
Okay, so sorry to interrupt you, but let's say you go along, so you put the stop below the G. How many ticks below would you put your stop loss?
So me personally, right, when I trade, I would look at the day prior. I would look at let's say if this was a PDL is right here from day prior, right? Would I put that in between here? Probably not, right? I would make sure that I have some reference or either a level, or if I'm purely trading, I don't see anything. Let's say it's a blue sky breakout. I would put it maybe three quarters or maybe 1/2 or tick below that.
Okay.
And if I see the volatilities, let's say, is massive on a day like this, well, then you got to figure it out, right? I mean, if they're moving and they're running like this, or if they're running like this on a day like this, I can keep a tighter stop loss, right? I don't need as many ticks. If they're running volatilities higher, then I have to reconsider that. So I know, hey, they've been running stops via high volatility. Then you might want to consider a little bit wider stop, but in accordance to how far can I get? If I can get to this level and this is my short, how much risk can I afford and still have a decent risk to reward? So those three components would make sense. But typically, once I identify a level, if it's a low volatility, they've been crushing VIX, I usually give them maybe 1/2 or 3/4.
And is it when it's a high volatility that you adjust the ticks per box?
I adjust my stop loss.
Okay, but you always each box is just one tick.
That's correct.
Okay.
That gives me true price rejections, true levels for me.
All right. And
On
the one
NQ, you have to use them 4 or so.
Okay, yeah, NQ would be a wider. All right, good.
Yeah.
Thank you.
Yep. Mm-hmm.
Hey,
Okay.
Shorty.
Yep.
Oh, real quick. So, in the A period, would you have waited for the D period or the E period to go short?
Right. Well, let's ask if you guys wanted to play this. So you have your initial balance set here, right? And then you have in the D period, you have the axis that's being confirmed, right? And the D low is here, right at this level. Where would be a good short?
Probably at E at the TPO PLC with the stop above D, or maybe a little bit higher.
So you would take basically this would be your risk, correct? Your stop loss would be here, and you would target what?
B period low.
Okay. So your risk and reward are probably 1 to 1.
Yeah.
Roughly. So would you guys take this trade?
Probably not.
No.
You can definitely take it, but you better be right.
Yeah.
Because you're risking $1 to make $1. You better be right on a trade like this, because your risk to reward is not great. Usually when you trade volume profile, and I say this on day-to-day basis, so just hear me out. When you're trading day-to-day, is your better opportunity to take a trade at the extremes or at the POC to initiate a trade?
Extremes.
Extremes.
Yeah, so when you're trading, let's say you're taking a short at a fair price, think about what you're doing. I'm going to short fair price. Does that make logical sense?
No, it
No.
sounds
No.
choppy.
It
If
can be
you're
really
doing-
choppy, and you might be in that trade for a long time.
The first trade I see is on the C period going long after it breaks back inside the IBL, above IBL.
That would be a two-sided activity where people take this. When you break IBL, you reclaim it, and you would target probably. Most people would take this the B high where they open, and they would close that. But here, maybe C, you could target that, and that would be mostly a scalp trade that you would take. And there's few other trades you could play, but the risk to reward that you would have is not necessarily as great as the two that I identified. Right. This is
The part I have a problem with, or I have a thing, is this bottom one right here in the G period, right?
Mhm.
If I'm looking at this, if the F period happened, I would say, holy cow, you know, how do I know that's not the end? Because that would be a big long wick.
Okay. That's
Single
why
trend.
you don't take this trade here immediately. You would wait for some kind of retest to see if this is going to be the access low.
So
Once they
after
came here,
H, so because H was higher than
exactly,
F,
it's a higher low.
Mhm.
So this here is telling you it's a higher low, right? So this right here is telling you higher low. So if that's the case, then when it came, you would have taken a trade here, right? Or this was your, print first time between the F low and G. So you had 4 TPOs here.
Mhm.
So once it came here, right, on the H, let's say you took this trade right here, your risk is right here. You would put it here, and this is your risk. You would have the risk of 4 TPOs, 4 ticks, maybe and a quarter below, and then you would target, like you said, POC here. Especially if, let's say, the footprints are showing, let's say the selling volume here, the volume is going down. Let's say the delta is also going from, negative, coming slowly to positive, or not as negative as you're coming here. And then you have a nice single print and you see aggression in buying. That becomes a really, really good validation that you can buy this on a retest and look for a two-sided activity to push to the POC.
Would
Is
you
that-
always wait for a retest?
That depends on sometimes for me on the footprints. If I go on 5-minute footprints and let's say, this whole candle here is 30 minutes, right? If I see, for instance, let's say the footprints are showing that there was a massive bid here at the bottom. Let's say like a large, candle on the bid here, and I see the aggression, right? And I see that there's price is going away from this level. Sometimes I don't wait for this to occur
Because you may not get it.
because you might not get it because the opportunity does not stay there for a very long time. Like or Thursday, I waited for, there was a 30 level. I waited on NQ. It had a really pretty shelf and we had an explosion. And I was like, okay, well, I'm waiting for 30 to come back. It hit 35 and a quarter, right? I had no fill because my fill was at 30 and at 75, I believe, or something around there. I did not get fill over 4.5 points. And then the price of that went up 150 points from that level. As a trader, I was like, okay, well, I missed it and I missed a great opportunity. Now, if I stay in, I'm either going to chase or I'm going to be minimizing my, my reward. So the best thing I did is I went outside and played with the kiddos. Some opportunities you might not get it, right? And then some opportunities you have to show prematurely your plan on what you're going to do via market auction, meaning I become an aggressive buyer right here. And the only time I do that is if I see, 5 minutes is indicating, let's say the POCs are coming down and I see the bid would indicate, what does bid indicate when we're auctioning lower? If I get the bid and the price doesn't go down, what does that mean?
The selling has stopped.
Okay, and in what way? What does that tell you in terms of the price? So if we're auctioning lower, and people say, oh, it's catching bid,
Passive buyers have orders.
that means passive buyers, right? Like these, they had orders sitting there, so the bid's showing up at this level. And that typically you're monitoring to see, right, if it catches the bid again. And that's what we call the retest, like period I and H. And then you basically are hiding beyond these bid section though. Whoever showed up the bid, now you're seeing if they catch the bid again. If a lot of people are watching that and they start bidding, well, naturally you're going to go to the fair price where you meet who? You meet the other seller here, and he's again selling there. And you see the M period went all the way to the value area low. Here's a trick question, and it's fairly simple answer. This one here. How else would you know the market auction? And it's fairly easy. Is it trying to auction higher or lower?
When passive buyers or sellers are stepping in volume.
The shape of the profile.
Okay, valid points. You want me to give you guys one simple thing to look at every day and see how it works? What about open price? Do you guys think that plays a role in a sentiment for anyone?
You referring to the opening drive or just the opening price?
Well, in this case, let's say we open the price at this level right here. Let's say that's $30. And most of the price action happens above the open. What is that telling you?
You have buyers, aggressive buyers coming in.
Well, in terms of auction that I'm trying to gauge, right? I'm trying to gauge if the market's trying to go higher or lower. If we open and majority of the price action is above the open, what is it that market's trying to do?
They're ready to start going higher.
They're trying to auction higher. If we open, right, and majority of the price action is lower, what is that telling you then?
It's trying to go lower, but isn't there the caveat that if, for example, your settlement price is above the level
No,
and you've been topping the level?
Yeah, that's inventory. I'm just talking about sentiment. How do you gauge if the which way is market trying to go? Because that sentiment can kill the traders.
Yeah.
Like if you're not able to figure out if you're on the wrong side of a trend day, you're dead. So one quick way to look at this, right, without anything else, there's a lot of stuff we'll add to it that makes sense. Like, are we opening above value or below value? Are we opening above range high, PDH or PDL? Those are other indicators telling you the sentiment and the price acceptance or rejection thereof, right? But if you open and the majority of your stuff or price is happening above, they are trying to auction higher. If you open and you're trying to auction lower, right, you're spending a lot of time below the open, that's just a small sentiment that they're trying to go higher or lower. Keep that kind of in the back of your head when you see it, right? We open here, but a lot of prices lower. Are they trying to auction? Then the next question would be, are they doing a good job auctioning that, right? And once you're trying to answer that second question, you're looking for volume, value area shift. Is it shifting lower, higher? How wide is the value area? And then is there any access, right? If there's access and it's stopping that, then it might tell you, it broke lower, it's trying to go lower, but it was met by responsive buyers at a particular level that you had. And that's how you would gauge that day to day. At least this is how I look at it, guys. Okay. So does this slide make sense? I think we covered a lot of it. Access. So access happens on the top and the bottom, and those are called selling or buying tails. If you have more than 2 TPOs, that's called pour high or pour low or unfinished auctions. Okay. Let's see. We have two types of market participants, and it's important for you guys to know when who enters. Long time frame participants, because those are the boys that can move the price beyond range extensions. Range extension is when you have the IB, which is your black line here, or initial balance, A plus B period. So from 9:30 to 10:30, that's your initial balance. When you break initial balance higher, right? And let's say your accepted price is higher, there's a high chance you're going to have a normal variation day where you're staying between IB and IB 2x. Once you break the 2x, that means what?
She going
Long
higher.
time.
Most likely you're having a trend day, you're going to continue, right? That the price is being accepted, you're on. If you break the initial balance higher and you're met, let's say with the excessive sellers at the IB right here, would you, how would you think about that?
I tend to look for the retest of that IB high again and try to play it down to 50% IB. So that's like mechanically how I do it.
Mechanically, that sounds correct. And most of the time, if you get a seller here at the above IB, there's something called, even in Peter's teachings, that they call that they call this particularly a failed auction on the IB. If you try to go above the IB and you have this excessive sellers, most likely they're going to target the opposite of the IB, meaning the IBL, with the first target probably being the IB 50 or 50% retracement of the IB. But a high chance, it's almost like an 80% rule of an IB, that you're going to auction lower if you do access here and if you fail to hold for like 30 minutes above it. And then we talked about this before, when you have initial balance and you spend, let's say 30 minutes above the initial balance high, 88% of the time, the low of the day is set. Think about how you can use that in terms of trading, right? If 88% of the time, let's say you're trading above this IB here, right? This is high and this is low. If you spend 30 minutes above here, that tells you that low of the day that was here is set 88% of the time. So how could you use this to your advantage if this is the case?
When you go long,
You would
once
look
you come
for
back.
you would look for long opportunities on any retracements inside this IB. Whether it's 50% or you use volume profile, you would look for something to go long and you would look, to get the best buck for your value. If something drops, let's say they lose and reclaim, I mean, that would be your best risk to reward to hit the opposite or trade away. So same scenario as the opposite. If you spend 30 minutes below the IB, right, and then you're accepting the prices, there's an 88% chance that the high of the day is set. Anyone does not get this?
It makes sense. Are you saying just chop around that IB area?
It has to be above it. It has to spend 30 minutes above, meaning the closes of the candles in 30 minutes, they have to be above IB. Every candle has to close above it in 30 minutes. Does that make sense?
So wouldn't that candle
Yes.
be 10:30
Yeah.
that you're
That'll
waiting
be,
for?
well, that'll be the 10:30 to 11, right? You would want the C period, all of it to spend time either above or below, whatever the scenario is. So in this case, you see how this C period is within. It's here. It didn't really spend time below the IB, right? Spend time within the IB because the IB is here. So if this spent here, then we would know that this here, 88% of the time is the high of the day. Does that make sense?
This would be the low of the day. The C.
I'm saying if the price spent time here, right, below IBL, that means that 88% of the time the high of the day is set.
The one
That
that
means
was set
that,
above is
Right.
locked.
that's correct. Anyone confused?
So knowing that, Shorty, how would you enter into a trade? Right, you'd have to at least wait for the C period, right, for the IB to be
Yeah, you
set.
want to see how it's set, right? So you see
Yeah.
here the D period, and this is why market profile becomes very powerful in terms of this. You see that this indicates the sellers are here.
hmm
So, and we're still within the IB, right? So if the sellers are stepping in the midpoint somewhere around here of the IB and it's showing access, right? Single prints, that means, you know, there's interest in selling the prices down. So here you don't have any indication. Here you see how much time you spent below IB. So this is below IB and this is 30 minutes below, right? So that means that this high that we set here is 88% sure it's set, correct? If that's the case, and you know the single prints came in here and the access, when you came and let's say revisit this, which happens to be your developing value area high here, what should you do here?
Go short.
That would be a short.
Yeah. So in this day as it's developing, right? You wouldn't go short at E or value area high if that's where it's at. You'd wait for the L period to go short in this scenario. Is that right?
I'm not following. I would wait for a retap somewhere of this level here, whatever this is, of the
Okay.
ledge of the axis. And then I could use the opportunity, right? Whether it's, you know, for confirmation, if you grab the fib from here, 1, all the way to 2 here, I mean, you would get some retracement probably here around maybe even 50%. So you would have the fibs and you know the excess people are sitting here based on market profile. And then if the volume shelf was probably somewhere around here as well, if I was to gauge this based on time. Not necessarily always the case, but you could use volume profile along with this and knowing the 88%, then I could take that short, knowing everything that transpired prior to this level that came here.
Okay, so let me see if I understand you. So as the day is developing, right, IB is set, and let's say it's E period, and it
Mhm.
went up just above value area high. Based on what I just understood, and correct me if I'm wrong, you wouldn't enter into a short at the top of E. You would wait for another retest after you've done the fib retracement for a higher probability trade at the top of L. Is that
So I don't know if this is access right here
Yep.
until E concludes.
Okay, which could be at the bottom. Well, it could
Well,
be
what
at
if this E auctioned here and here and here?
correct.
If you said, if I understand you, if you said currently we're in E, meaning
Yeah.
we're working in E, I wouldn't know that this axis is here.
That's right.
So could you prematurely take this and treat this as access here from prior periods? See, you could, but you're putting a little bit of risk on yourself.
Okay.
Because if they get initiation here and they absorb this, it's going to be a violent, most of the time, violent move.
So I'm a little confused. You're calling that excess on D, but the A period.
After the E period's done.
Okay, so you're just looking at it as from a period standpoint.
From period
excess
standpoint, correct.
got it, okay.
That's correct. We have the overall day access is going to be where?
The A period.
It's going to be the whole day period is right here, right? So it's right here, right? I tried to line these up. This is your access for the day. I'm giving you an example of intraday and how I look at the framings of individual TPOs. When they try to auction higher here, we got E period said that they re-entered again on the short side. They were obviously short here. They re-entered here, and now on a retest of this, you're expecting them to auction lower. Just like here, you're expecting them to do what?
Auction higher.
So,
Auction higher.
I would miss this J period because it didn't touch the E.
You would miss which J period?
I wouldn't get the short on the J period because it didn't even match the E. It didn't make it up. There's one whole square higher. It didn't test it.
Are you
It's
talking
actually higher.
L period, or I'm sorry?
Yeah, I'm sorry. Yeah, L period, I guess. You're right. L period.
Okay. So, and that's where me, you, and other traders, like I missed a trade over 4 points for 150 points.
Yeah.
What are the odds that you're going to get a perfect entry where you said you would get an entry?
Yeah.
And I don't have an answer for that, right? And some people will say, I know exactly where they're going to come back. Is there a chance that we can get those levels? We had a couple of them, Friday hit certain levels to a penny and they bounce.
Yeah.
So if you see that they're selling before they even fix this poor high here, or the ledge, if you call it, right? A, C, D, E. If, some people would take this as a sign of what? Well, you could take it a sign of weakness because they're not even able to fix this, right? That they're going to go lower. If this developing value area high, the dotted line is here. Well, if you take a short here instead of the one tick higher, right?
Right.
What does that mean? Well, that means you're taking a little bit more risk because your stop loss is still here. Your entry moved down a little bit, and you could think of that, right? But this would be your developing value area that you're taking off of, not necessarily the ledge and the axis.
So this
And
is
not
where we
always-
basically we focus on footprints or other types of things to confluence to give us an idea of an entry.
And you guys know that I personally, I hate single line entries, right? And you guys, if you go to read Shorty's Corner, sometimes we'll say, I will give you a certain level with accuracy. If it has point, like 63.25, there's a reason for that level. If it has 63 to 66 and a quarter, this shows you that I don't have enough confidence to know if it's a certain level that has to be revisited. So it's going to be in this range. So when you see intraday session like this, right, and that's what I probably could have done. And I actually went back to see why it bounced at 35, and I know why it bounced at 35. But if I was to look at this, right, you have a poor high, value area high here. Typically, they like to sweep above and fail, but you could take a trade here. If you're going to take two contracts, take it here and here. Much easier said than done now, right, than when you're inside the trade here. But is there a high chance that you could miss this trade here? Yeah. If you're expecting the access to be tapped or reach to it, you might not have that. But then again, if this is your TPO and you use the fibs here, maybe you will have a confluence level that's telling you a little bit lower. Maybe it's a VWAP. Maybe it's any other indicator that you're using or information being generated that might be, what you take. So the right answer being is, if I was to wait for perfection on every trade, I would have one trade a day or not even. Perfect traders and traders that win 100% of the time don't exist. And just like every other trader, I miss trades, I miss opportunities, and I make false, trades, meaning I take trades where the auction goes the other way. And that's the important part, is to accept that. So does this slide and example help you guys? Because I think more examples like this, and then in context with other days, I think would help you guys really understand the value of understanding the axis, the prints, understanding the value shift between areas, right? Just because it was set here between these periods, A through E, doesn't mean it's done. They explored lower, they found prices higher, they went to the opposite extreme of that, right? And if you think about this, where's your A and B top? Just to clarify that, Bean, where's your A and B meet? Your initial balance, right? Where you see the B only reached to this level here.
Yep.
So sometimes that's also people look at it was B equal to A's or how far did it reach? Well, if you look at this A and B and you look at this, not bad. Right? The B period was fairly tight in terms of the range. It wasn't nearly, it was only about 30% of the A here. So sometimes look at this when you're looking, where's the B period starting? What's the high versus the low? So put in a lower low, lower high, -1 here, put outside the higher high, higher low. Pay attention sometimes, see what's actually happening and where is it that, they're happy trading. So it seems like a lot of happiness was here and then they went lower from that E period. Well, if that was the happiness, just look, they're most likely going to come back and trade that and see if they're happy higher. And to be happy higher, they had to take this D period to visit A. And they obviously they did not. So do you guys find value in discussions like this? I honestly think this is going to be your bread and butter, is to look at these days and analyze them with some points like I wrote and on the right, and you can utilize this to find the days, analyze them, share it, and see if it makes sense, and then see based on the assumption. That's why I asked, what would you guys expect the next day to happen here?
Very helpful. I don't know where that particular, I know we have in TradingView the TPOs. Do we get that one on the right-hand side though? That looks
Yeah,
unfamiliar.
you do. Let me
Oh,
show you.
okay.
Yeah, so it's called split by blocks. So here, if you guys go, you will have to type in under indicators TPO, and it's gonna be right here, the time price opportunities beta version new. Okay, and if you go here, right, you guys are gonna see once you click on the settings under style, it'll be split by blocks, and this is the day that it splits by blocks.
Fantastic.
And if you
Thank
guys
you
look
so
here,
much.
this is the day that was in question that we had. So now look at the context of what's happening. And this is pretty much what you should be doing every day when you're trading. This is the balance that we are in 2 days, correct? Right, we're in the balance, and this day here, right, we had a little bit of a gap down between the days. So you had a gap down, and then you had a selling tail down. When you have a gap down and it follows through with selling, that's pretty aggressive that somebody's trying to offload the shares, right? So when they started selling off here, they had access, right? And they came in here the next day, and look where they came to.
Right before the access.
They came right to the access and they were met, right? And not necessarily was there another access, but it was on the tick size that I'm on, probably 4 now, just for purpose of pictures. You see that it was, it looks like a poor high here, just one TPO at the top. So now let's take a look here. Once it adjusts, hopefully sometimes today. There it goes. Now, if you zoom in, this is just one tick, and you see that it has a little bit of access on the top, 2 TPO and minimal qualifications to be called selling tail. So this level here, if you're able to get over this level at any point, there's a high chance you're going to have a major short squeeze and push higher. As you're selling here, right, there's something that you note, right? You had the selling day that we just covered in the PowerPoint. You see that you have a pretty decent access low, right? They got absorbed. And I would say based on the data you had here, who's in control between the top or the bottom? Who's in control in terms of other time frame participants?
Bears.
In this case, it would be the bears. Why is it?
Because of the length of the tail.
The length of the tail. So I just want to make sure everybody understands. This length of the tail is pretty big compared to the tail on the bottom. It's still other time frame participants, but it's not as aggressive. The longer the tail, the more the aggression. So now when you think about this, when you look at the context, you're in 2-day balance in this day, and then you broke out of the balance, then you went lower, then they absorbed the selling and they went lower than that, right? So now I'm just gonna go a little bit bigger just so we can see it all at once.
Shorty, when it comes to tails, would it make a difference if it was early in the day than late in the day?
Usually the A period tails
Uh-huh.
hold for the rest of the day. 90% of the time, the A tail will hold if it's excessive like this. They will hold that high. They will not let go below. A and B tails are really, really important.
Okay.
Okay. So now when you look at this, right, and you just zoom out a little bit and see what's happening. So you had a 3-day balance here. I'm just giving you the context of the market, right? So you guys can kind of make some decision. We had 3-day balance here and we had an imbalance to the upside, which was right here. So they agreed on 3 days here, right? So value area high, pretty wide, outside day, and then you concentrated inside here. And then you have a tail here, and then you had a poor low here, and then they broke out of that, went higher. They broke this high, they came back for a little bit of a retest here. So now this was the area where they rebalanced again. Let's see. They had a 2-day balance again, they popped. Right, this was the all-time high that we had, obviously. Then they dipped lower, right? They dumped all the way down to the 3-day balance. They came here, and then you see that they bought it back up, another explosion to this level, and I guess they didn't like it. They came back, they accumulated for 2 days, they had a trend down, and that was the day in question. And then you see that there was aggression here, and I think this is when we had some news and release. And then we did put in a lower low here, right? But when you think about it, all we did in terms of price action is that this 3-day balance was revisited. So you went higher, right? That you didn't like this, right? You had a little bit of almost like a triple distribution here, and then you went lower and you came back right in this balance here. So your range of this 3-day was never broken. You came back here and you bought more, right? And then you went again 2 days lower, right? And here you put in an overlapping value area low, right? So here, notice this here, something happened here as well, right? If you guys look on this day, something happened. This is where you had an idea that it might eventually come down, but it had signs that short-term activity, short-term short might work on this day here. Does anyone know how? What is it that Thursday gave you indication that Friday we might auction lower out of this range, or at least pull back to the bottom of this between these 2 days?
The skinny belly.
Okay.
The
What
POC.
profile is this here?
A B.
Okay.
Double distribute.
All right. Let's zoom in a little bit. All right. Let's see.
Oh, the end of the day, M period.
Okay. Let me just extend this. Here's your 2 days right here. So something happens here in a double distribution, right? Your double distribution is separated right here in H period on Thursday. Correct? You see it here?
Mm-hmm.
And now, if we are treating this, if this is our top, right? What is the level that separates the top from the bottom? Acceptance.
The bottom,
POC.
that bottom line you got there.
This would be this one. This is your line now, because this is your single print. So if I was to go back into the split by blocks, you see this little level here, the little skinny belly, one distribution, second distribution. So here, you opened and you try to auction where, and you look at the price action, most of the price action was above the open. They tried to auction higher, right? Then they went higher, right? And then the next day they opened above the value area high of day prior, okay?
Mm-hmm.
And they put in a higher high, meaning they broke the, what is this, PDH here, but they broke it in what period was that?
Until the J period.
Well, on Thursday, this was the end period.
Oh, right.
The
The E
settlement.
period is when we
Yeah,
started the
so that
break.
means
End of the day.
so that means that this right here was the poor high, correct?
Hmm.
Mhm.
So if what does poor high mean?
Failed auction.
And they like to fix failed auctions, right? Especially when you're accepting right here and you closed on a trend day on Thursday, you closed, you open here, you close on the opposite. That means you're closing at the high and then you open below the settle price, right? But then something happens, right? Something happens here is that they're no longer accepting the value inside the top distribution. And a shift like that, that's important to note. So now when you go on split, here's how that looks, right? So you see the H period on Thursday is the one where we had initiative buyers come in, right? And you see how well that worked, right? So they came in here, they went above, right? They separated. So opportunities, for long, you had minimal here, right? J period would be the J low would be a decent period to buy here. If you bought the J, what is your stop loss? I'm just giving you scenarios.
50.32.
50.32 and below would be your stop loss. So something like this would be your long position. And if you're waiting something like that, and you would have, if you bought this, you would have to figure out other levels from the left where you're going, but your trade would look like something like this. And we would have to find whether it's value area high, which would be somewhere here of day prior. It was sitting right here. So if that's the case, right, you see here, right, you would take that and you could play that, right? But then the next day, and this is day to day when you do the analysis, right? The important piece that happens is where did it open and how did it close? So now if you think about this day to day, so they left a single print on the top, and I'm pretty sure maybe that J period's a little bit wider on single tick. So 2 days in a row, you had higher highs and you had sellers, but where you opened and where you closed here is a big difference. Here you open and you close at the highs. Here you open high, above value area high. It's telling you that they're not accepting the prices above this value. If this is our value of Thursday right here, right, value area high and low, we opened above and then we lost it. And we lost a key level of 32. So now we're accepting the prices in the lower distribution, meaning you can target the 517. And this was one of the trades we identified. You want to target this below 32, high chance you hit 17. Does that make sense? I think I even had this level identified on the chart.
Okay.
And from here, right, how can you tell that there's a potential for lower? Well, I mean, there was no way to tell. First of all, we gapped down because below this level, so they didn't give you anything, to work with. But once you crack this with the gap, that's clear direction that the sellers are eager to get out of this value. They said they rejected this. Now you have to accept here, so they rejected it. Then the access came in an A period, right? And they held it the next day. But you see something slowing down a little bit, right? When you are breaking a gap and you're just starting a new trend, should you have overlapping values immediately? And I'm not talking about small overlap where it's, tiny. This is a pretty decent overlap, right? Do you expect this out of new trends or healthy trends?
No.
No, you want to see stacking value areas. Like for instance, when you're starting to go out of trends like this, you see the value higher balance, higher balance, shifts higher. There's no immediate stopping on the value shift. And here you're seeing that it happens, and that's your cautionary sign. You're back to that 3-day value area low, and you see here, 49.60 acted as a magnet. And then of course, you guys know we had a huge gap up here and we shifted. And now when you analyze today's data, right, is there anything, how would you guys prepare for Monday? Here's a good lesson that you guys might get out of this. Look at this day and look at this day. Is there anything telling you that something's, which way are we trying to go? Let me lower this to 2.
So there's more activity below.
Back down after NVIDIA because of all those single prints and the spike.
Okay, let's look at, for instance, this day here on Friday. What is market trying to auction? Let's see how you guys would go.
Trying to auction higher.
Okay, so pay attention where we opened on Friday.
A
Let's
period
say-
B is down.
Okay, this
Maybe
is our
drop.
open. I'm just gonna put it right here.
We opened at all-time highs, right?
Yep, so let's see. We opened here, right? And we closed. Day prior was here, right? So
Yeah, we
let's
gapped
go.
up quite a bit.
Yeah, so let's see. Now you opened here, right? A period opened here, and then your initial balance was set here. Here's your initial balance. So now think about it. The B high made a lower high, right? And a higher low. So that tells you we're consolidating. We're trying to build value here. C period came and immediately said what?
Later.
Nope.
There's no value here. Now you know, somebody asked earlier, was it you, Texas? Is there any single prints that matter more? Well, A and B period, typically when you have access in A period, you should not go above this. Like that's pretty much the rule of the access in A or B period. So that you should probably hold this here. Now, when you think about it, what transpired, right? Majority of the auction is below the open, right? So you see here B, C. So if the majority of the auction, just a simple test, is below it, that means the market is trying to auction lower. Then you see the C period, right? Crack down, the D period crack down. But where did they go to?
Open of the previous day.
Okay.
Was another close. Yeah.
This was the close. They came into the close of the previous day, and then what happens?
Dipped below and bounced.
Yeah. Initiative
Okay.
buyers.
Okay. Think about this area here from the day prior, right? So you see here the G period at 1 point. So this was the value area here at 1 point. 50.80 was the value area. Then they basically argued here and they went higher, higher, higher. But you see this period, I believe it's H. Yep. H period put in the high, and then they came back and retested that, right? Nicely in the K period. So this here becomes almost your new value area right here. This would be the value area high where you have the poor high, and then this here is where they're respecting create value. So they tried to auction lower, but is this a bullish or a bearish close on Friday? In context of 2 days, is this bullish or bearish?
Bearish.
It's still within the value.
Bearish.
Yeah.
Market is auctioning higher. We put in a higher high. And the value is catching up. The value used to be where? It used to be here.
Mhm.
This was your Thursday value. I'm trying to get it lined up.
Yeah. So it's essentially within value right now.
Well, it's still, the value is still shifting higher.
Yeah, it's
Right.
gonna go up, right? Because it's consolidating down here.
So it did not breach this, guys. So when you think about day-to-day
Go forward.
information, market's trying to go higher, right? It had a little bit of a trouble here. Market participants said, no, we think the value is below. So as long as they don't crack what? If they crack 50.91, what happens?
Into the value area of the previous day.
Most likely that would happen. So now let's look at it on composite profile and make sure that we agree with this. Let's look at this area here. Okay. Now let's see who can create a story for when we would turn bearish. Okay. So we had a double distribution day here with excessive buyers on the bottom. These buyers are fairly aggressive. These sellers here, how aggressive are they? Nothing. This is
Not
called what?
aggressive.
It's an
What is this
eight-
called?
weak,
poor high.
weak. Yeah, poor high. Sorry, weak.
Poor high, this is unfinished auction. They fixed this. Then you have in the A period, which we notate here, this is your access, right? We had no new buyers coming up. We had other long-term sellers step in here and push the price down, and they wanted to auction it lower. Did they succeed? Think about this. Did they succeed auctioning lower on this
No.
day? Why?
Because they kept it above the skinny belly with this distribution. Essentially, that spike is
509.
creating a separate zone from the zone above and below.
They weren't able
Plus,
to close under
yeah,
value
plus
high.
we have that big long tail of buyers actively coming in.
Beautiful. There's two things that you guys mentioned. I'll just write them down so we have something. One, previous day, the value area high is where what? Other time frame buyers showed up and left access low. So how important is this level for them? Pretty important, right? They're finding value. As soon as you dipped it below this value area high, they said, no, 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 the price should be higher. Isn't that what this means?
Yeah.
Yep. So now they're agreeing the price should be higher. Two, right? They're shifting the value. The value is shifting higher, right? Is the value on a shift here compared between the 2 days? This one's pretty wide value area. This one is pretty narrow here, I would say, right? It's not as wide as a value area is here. So there's not a lot of participants here. If there's not a lot of participants here and the price fails to hold value area high, what other participants are missing?
Long-term participants.
Which ones?
Sellers.
Sellers,
Be
yeah.
careful. I said the price falls inside the value. Who's missing here?
Oh. Long-term buyers, but they normally don't step in at the above.
Well, they need to hold 96.5, which was the value area high, and that's what they did. If they're not able to hold this, that means that there's no new inventory, there's no new business coming in to buy. Let me give you an example. I gave you this example the other day in chat. Bean runs, I don't know, tire shop. Beans runs a tire shop and he sees, he's like, man, I'm just gonna buy bigger and expand. Instead of 1 door for service, we're gonna have 4. He expands the service, but the number of transactions that his business experience is not as higher. But that would mean that his cost and the rent is higher. Correct?
Yes.
If his transactional volume of customers is not increasing, how valuable is the space that he added?
No value. It's actually an expense.
It's an expense. So what does Bean have to do?
Increase my prices, or I need to drop them and bring in more business.
If
Either
you
way, I need more
increase
money.
your prices on a low demand already, what would you do to your business?
It would decrease. There's a fine line though between that supply and demand on if you can gain enough profits to offset. Because if I could double my profits and offset and lose 60% or 30 or 40%, I'd still be gaining. But I mean, that's more than likely I need to drop my prices, have a slightly narrower margin, and increase the business.
That's correct. So you're talking about elastic and inelastic demand. If I tell you that we have to buy air, right, every day, you're not going to have much choice. If I tell you you're going to buy, electronics that you don't need but you want, there's a difference, right? So dependent whether it's elastic or inelastic type of demand. But in your case, if you bought more space and you have a higher expenses for your business and your transactional volume, number of customers visiting, you increasing prices is not going to attract new customers. You had no justification for exploring bigger space, right? You needed to look for efficiencies in that case. So for you, you would have to size down and go back to serving the community with 1 door that you had, and also look to maximize your value that you get out of it, whether it's additional services or not, but that would be how you play it. And same thing here, right? If they can't agree and find new buyers at this level right here that they have to hold, well, then most likely once they lose this 87 level, that they're going to be what?
They're going to be looking at a different, completely different range.
They're going to be looking to accept the prices of the day prior and most likely would revisit this. I would target 67 to this value area low. I wouldn't wait for 62. Does this make sense? What I'm analyzing, because this is your live market for Monday.
Would you please repeat?
Yeah, no, I can repeat it.
Thank you.
So if our Thursday value area is here, right? This is our value area high here, right? And here you have single print separating the two distributions of Thursday. And so far we're building value in the upper distribution, meaning here or here. Right? If the bulls hold this area here all the way till 87, that means they want to create value in the top here, which is healthy, it's bullish. If the bears are able to auction lower and most likely reject, say no to this value, very high odds that you're going to go to the bottom of this and you're going to try to accept value lower. And typically when you have a B-shaped profile in the uptrend, what does that indicate?
Indecision.
It means a liquidation of longs, meaning that they were trying to buy, but somebody let them have the inventory. And we can agree with that in this case because of the single prints at the top. That somebody, other time frame participants got in, we opened, and then you closed below the value. So somebody's saying, hey, that's enough, let's slow down. So for us, first indication of bear sign is going to be this absorption and a crack inside the value area high. A confirmation that we want to go auction lower is going to be cracking 87 where you had single prints. Single prints in the middle of the profile mean what?
Double distribution. Right.
Most of the time it's a line. It's single prints is the one that kind of
You had,
split day into
you had
two.
aggressive buyers in this situation. You had aggressive buyers moving it from one price to another price.
That's correct. So
Aggressive.
something changed in the market here, right? So if you think about this, how this day went, if you look at it by the blocks. So here you had the A period, which pretty aggressive right here. If you guys think about it, came in here and then they put in a line and then they auctioned higher. And then you see that this line here, the A high, this was your initial balance high. And then they spent some time above. They did not spend a lot of time below this initial balance. And therefore, remember what I said earlier on the PowerPoint, you guys recall? Let's see. On this point right here, on the questions. How do you know, remember how I said, how do you know which way is market trying to go? I mentioned something earlier. Let's see who followed along.
Whether they're stacking the value areas.
Okay, one of them we said was range extensions, right? Are we breaking extensions higher? And how many TPO periods are we spending if we're trying above IB extensions higher and we're not touching the lows? That means the trade's trying to be facilitated better in that direction of the breakout of the IB. Is that correct? That's that what we said earlier? And then you have the long-term access, right? So you have range extensions, auction rotations. How many TPOs are making higher high versus lower low? Is that what we covered earlier? Range extensions and then the long-term access. Those are the 3 points along with open that can tell you which way the market's trying to go. So now when you think about it, which 3 do you have here to validate which way the market's trying to go? Just use what you see here for this day. So let me give you the open. You opened right here. Now look at the split. So this was your open, right?
It's a little hard to tell, but it looks like we opened and searched potentially down and then sprung back up as aggressive buyers stepped in.
That's correct.
So our opening drive was actually to the downside, or that's what I would guess looking at this.
And that would be a massive gap, right? So you gapped up, right? Keep in mind you gapped.
But you touch the prior, yeah, you touch these other candles highs of that,
You
testing them.
tested the range breakout
Yeah.
before. And that's called, in most cases, it would be an open drive here. You came back, or, you know, if you want to be really specific, you had an open test drive, you came in, tested, and then you continue, right? So in this case, right, the market is trying to auction higher, right? We're above the open majority of the prints. A, B, even if you exclude A, you know, everything is above. B, C, D, all of them are above. Then you think about the range extensions. So above open, check marks. Are you above IB? Are you trying to auction above the range extensions? Well, you're trying to facilitate trade above and not much below, right? You haven't even came close to that. So that checks out, right? What about the last piece? Are you putting many lower lows or higher highs?
You'd put in higher highs because after C period, when you tested the bottom of IBL, that was a great long because you have an 88% chance at C that it's going to bounce there. Same with D, you had an 88% chance it was going to bounce there.
That's correct. So in terms of sentiment, which way the market is trying to go, your answer should be is trying to go up. First, it gapped up. That's a really big indication. As long as they don't encroach the gap, right? If they auction lower here earlier, right, and let's say by 10:30 or 11, that would be a weak sign that they might try to close the gap and fill it. Right, but here they never really gave you a sign that they wanted to go lower, right? They had poor lows here. They're saying that there's, you know, strength. They're not breaking them, and then everything went above the IB, and then everything else continued higher. Does that make sense? How you could use that, the points that we talked about in the PowerPoint? And quick tool, I wrote that down for you guys here. I left it in the notes so you guys can revisit, so you guys don't have to look at the slide and think about it. Open the notes, it's in there. Does that help anyone? Like understanding why the sentiment's important and how you gauge it?
Yeah, sure.
Okay. All right, let's take a look at the session here for the rest of the days. Does everybody understand why it's important that dotted lines that I said for, and every day is going to have a different scenario, right? And that's why I say for a lot of you guys to learn this stuff, there's one point in trading that I cannot teach you. Does anyone want to take a guess what is it that I can't teach you?
Psychology.
That's one of them.
Discipline.
Those are all valid points, but I can't teach you market logic. Your understanding of market profile has to be to what you understand, and then the experience of seeing the patterns occur.
Yeah.
Right? I can't tell you, you can't learn, you know, me telling you this, the B shape, you know, is separated by single prints. I learned through the experience that any time that we are holding the upper half and the bottom line is the line in the sand, right? What they have to hold, if they crack it, the most likely shown weakness that they want to go bring the value lower. Those things that you guys will have to put time in is going to be basically that you guys will have to spend time and screen and analyze. And I will never tell you no. If you send me a chart and you annotate it like this, you know, and you put this is the level we have to hold or market, and be like, hey, is this right? Am I and I will not tell you that you're wrong, but I will give you my perception of what I see. Is it that chance that you read it right and my understanding of market profile and what I'm seeing is different? 100% of the time that occurs. Otherwise, how would we have liquidity?
Yeah.
What's valuable to day time frame trader might not be valuable to who?
Someone
To
holding for
other
years.
time frames. Somebody that was willing to hold. The only rule I always tell you guys on a long-term scale, a buyer that's a long-term buyer and seller will never exchange hands. If that hedge fund or that pension fund wants to survive, they will never exchange hands with those long-term people. They will exchange it with you. Right? Okay, so let me go back to PowerPoint. So far, does this make sense? Is there anyone that was new to market profile and you're seeing some light after what we've spent so far?
Yeah, it's like night and day.
Okay, that's good because I'm expecting at least a little bit more confidence from you guys. Okay, so this will be used for you guys to identify, right? Short-term frame participants. Other time frame buyers are the ones that show the hand and who's potentially in control of the auction, right? If you see it happening intraday to the upside, double trend day, and you see single prints like we did, that's most likely bullish people stepping in and breaking the IB. IB is always broken by initiative, buyers or sellers. Okay. Does everybody understand kind of the talking points of this, right? You have the POC, the value area high is just the extreme of the value of 70 or 68% of the volume. And then you have the open close. The midpoint is half of the range of that day or week. Those are called halfbacks. When stock market goes for a long period of, let's say, a week without touching the previous week halfback, it is said that it's very aggressive market and they're looking higher, right? When it fails to hold those halfbacks, that tells you the market's weakening on weekly or longer time frames. People use it differently, but that's the interpretation of it. All right, let's see. We talked about this. What I plan on doing is finding examples of different days and different contexts and add them to this market profile. So almost it's like you guys can go, because certain patterns repeat a lot, because it's always balance to imbalance, back to balance, and identifying what triggers it and where it happens, the shift happens, is going to help you guys identify that for you guys moving forward. So I plan on adding more of these with annotations. So you guys can at least go back and see what happens and where's the entry. I can put them, you know, on a chart or in a text like I did on the right. So just so you guys can see it and kind of repeat it and moving forward. Okay. Auctions. So we can talk about them here, but the only auctions that I care about is if it's in a balanced market, right? I'm looking to see how confident is the market trading at the extremes. I care about the extreme trading because those are the points that can drive different type of auctions. If you have an open drive, right? Open drives don't really care much for anything. Open drive is the most, I would say, bullish and most confident drive that you have. Open test drive, right? You would have, this is the example of an open drive, right? You have the A period and you really never go below the A period. And in this case, you really never even go, you know, below 50% of the A period. You're holding and you're just building higher. You're not putting in a lower low. And in this case, you never even clear the AB low. You're continuing putting higher highs, higher lows, and the minimal retracements that are built on value. Like for instance, here you had the CD, then you see the E period cracked below, but it really never went below the B low. It went below the C and D, which was a poor low. But here below the ledge, you know, if they were able to crack this, that would mean that there's a high chance they were going to visit the A low. So this forms an open drive. An open drive sometimes can be the hardest play because you guys might miss the opportunity to go long. and then you guys start chasing. And open drive is the most confident. So if you're fighting the open drive, directional open drive up, you're gonna be hurting by the end of the day because you're gonna be, let's say in this case, shorting a train. So when you see an open drive, and in this case, you're counting how many higher highs are put in, just in the first, 4 periods, you have 4 higher highs and higher lows. So the E period is the only period that put in the lower high and the lower low. That's indicating what rotational factor they're trying to auction higher. And in this case, it also checks in one more thing. What is that thing that it checks off that they want to go higher?
I guess opening drive terminology in this situation can be multiple periods, because I thought the opening drive was like maybe the first 5 minutes or minute or something like that.
Opening drive, opening orbs for me are 30 minutes. Right. So opening drive itself, right, is opening drive's 30 minutes. You have 30 minutes to set it. When you talk about the open, if the first candle, let's say, is a down candle to a PDH of a day prior high, and then you reverse from there and you bounce and you make higher highs, that's open test drive. You opened, you tested a key level, and then you drove higher. Okay.
Yeah.
Open, reject, and reverse, right? You open, and let's say you hit the PDH of a next day, and you reject there, and you reverse, and then let's say you put in a lower low. Let's say you set 5 minutes. You clear, and that's the type of trader you would be. You break the opening 5-minute low, then that means you open, you test it, you reject it, and you draw it driving lower. And then you have an open auction, which is just a boring sideways activity that's going nowhere. Okay. In this case, this will be an open drive. This is not a cleanest open drive. Why is that?
It kind of comes back. It's up and down, and it's not like a straight up and then down, because you got a lot of overlap. Like the F period, D period, they're almost, or C and D are almost the same,
So the way I describe it is it's an open drive and not a lot of confidence, right? They're debating, but there's signs that we covered in previous points that we discussed that are indicating that they want to go higher. One of them is how many periods are above IB. Is there any periods that didn't go above IB before they had the breakout?
All of them did.
Yeah, so they spent a lot of time above the IB. You had the access low on the bottom in the A period, which we said carries a little bit more weight than certain other access, because that tells you right out of the gate when you have access being formed and it's never breached. What does that tell you about the pre-open?
Very aggressive buyers.
They're already predetermined for higher prices.
So would
They
you put
have,
more weight if there's a gap also?
oh yes. If there's a gap and you have an open drive like that, that's very bullish. The same thing that happened on Thursday on a slide that we covered, right? So here, this was your Thursday, they had a gap down and they had followed through with the access in an A period. Right? And then we put in a lower low, right? But the value was not agreeing too much because we had a 3-day balance right prior to these breakouts that was there. And we came into the value area low of that or prior week value area high. So there was a lot of short-term to long-term auction. What was it looking? Short-term was looking bearish, but the long-term auction was still healthy unless 60 was broken. And that was in our notes in the Shorty's corner, because that means we're accepting prices higher if we find buyers there. And you had to be quick to react to that to understand the market generated information that short term we're looking lower here, gap down, access, and then you see the re-entry in the D period, and then the next day they came in and hit that access right here somewhere. It was 97 or 8, and then I told Bean if they go above, I believe 98.75, Bean, I said they're gonna hit all-time high, and we hit that pretty well, right? And that's the market information and the logic that you'll be able to create. And you'll have to create a story for yourself. You have to be a storyteller to actually make money in the stock market. And your story is the two questions that I ask you guys: which way is it going, and is doing a good job going there. So now when you think about on Friday, it's going up, right? It's trying to go higher, right? But is it doing a good job? On that day, was it doing a good job auctioning higher? No, it opened, spent a lot of time below. So now it looks like, if we can absorb this and hit these levels below 87, I would target below 87, 60. So 27 points. So if I'm taking this trade, for instance, on Monday, let's say it happens, right? They decide. So let's say I take this trade. How much risk should I give them?
Of the dotted line.
I'm trying to give this. I can play this like this, right?
Yeah, that's
I
about
could
right.
play this as PDL because this would be my PDL, right?
Yeah.
So, and this trade would yield 6. Probability of this trade, I mean, if this is a 6-to-1 trade, that's good. Could I not put this stop loss above the close or value area low and see what happens? So this would yield 235. It's good, but it's not good, right? So you could manage this a little bit better with the higher probability and take more risk, right? But at this time, I would honestly just put it above this value area high, somewhere around here, like tiny bit above here, because the value area low and high are really close. So that's going to be a zone right here, right? That they're going to try and draw it here. So this zone here is going to be super important. That's going to be pivotal shift between value areas. So here, the value area high is still stacking higher, right? Value area placement is higher highs. Value area width is narrow. There's not a lot of participants like it was here on this breakout on the double distribution trend day. So now if there's not a lot of participation on buying and they crack this level here, that would tell me that they're looking for prices lower a little bit, and we would target this one here. And this would be a really solid trade to take.
If overnight we break below the low of the day on Friday's low.
92?
Yeah. If we break below that and then we approach this top of the dotted line on the single prints, would you go long?
Yes.
With the stop loss right below the second dotted line?
Yep.
Even on an overnight situation?
I would always do it on overnight.
Okay.
I would always do that on overnight. And if I wish I did it on Friday. Because the trade that we said short on overnight, if you recall on NQ, if you guys remember, I said I'm looking to see if they give me a sign to leave the short. The short worked. And then we also said, remember we had, let me see if I have the levels. I don't. Maybe I do.
No. Would you be confident enough to just go ahead and put in a buy on stop and just with the stop loss below and just let it go?
Right here?
The profit? Yeah. Like,
Oh,
I
of
mean,
course.
we open up Sunday night. I just go ahead and put that in and.
I've done that
say,
before. I mean, I did it on Wednesday to Thursday or one of the days, and I collected 32 points in ES.
I think technically that's kind of how we should be doing it.
Well, I mean, lately the market's been doing that, but the only thing is that, let's say aggressive seller comes in after hours and there's not a lot of liquidity. What do you think happens to your stops?
Always get taken out. Yeah.
I had a slippage of almost $100 and something, almost $200 on Friday. And that's pretty aggressive.
It's crazy.
So even though it's highly liquid, right? But some of the moves were really, dense and quick. So your stop loss doesn't get filled immediately where you put it, right? It's the drag that happens and you get destroyed. Okay. What I'm going to add here in this PowerPoint. So we have the market profile PowerPoint that you guys have, and I'm trying to split it into market volume profile so you guys have a distinction. Even though between market profile and volume profile, the profile shapes, the meanings that we have in this here are all identical. It can be applied to both, right? When you are having, for instance, profile date types here, you know, these days types are identical, right? Double distribution trend day, you have the typical days, then you have, you know, extended typical, which is a normal variation day, trading range day, and then you have just a sideways day. Each one of these days is, you know, reading here would be identical to market profile on how you trade them. P shapes, technically, those are short cover, you know, profiles, and you want to see them in a bullish trend where they don't spend a lot of value and time and volume on the bottom. They should be auctioning higher. If you see a P shape on the bottom, that's usually an indication of a short cover or a reversal happening, usually triggered by short cover. How to trade it, you know, you have high volume nodes that occur, and you can watch those happening as well. If they auction below and they can trap people below P shapes, you're looking for long opportunities because that's where they, you know, reaccumulated or accumulated first time. Same on B shape profiles here. And I put in the notes, and you can apply this to market profile. What I wanted to do is just keep the color scheme and keep the idea of the same. So I'm probably going to redo that for the market profile itself, but it's the same concept as volume profile. How to trade them, B shapes. So these are, you know, B shapes can be technically a trend day or a bullish trend day or a bearish trend day. So, and typically what we just found out, even on Thursday to Friday, they're separated by single prints, and that's what you look for. You're looking for LVN and volume profile, or single prints and TPOs to confirm that separation of the two values. B shapes start as not really confident to confident, right? Because sometimes they don't agree on the bottom value, and then all of a sudden they want the price higher, like in this case that you're seeing here, and they auction to the top extreme. And if they can't hold that, then most of the time they will auction back to the bottom distribution and see if they're accepted there. I typically say when you're in a B shape, right, if you're above the HVN on top, you want to be careful shorting, right, because that can really take off. And same is true on the bottom. Once they break the bottom node and they're failing to get the acceptance higher, most likely it's going to convert to a bearish trend day the next day as well. Market profile, these are the slides that I had here that I left talking about initial balance. So some of the slides I'm going to consolidate and bring them back just to kind of make it all inclusive. This is the slide that most of you guys should spend time with, right? You have the normal days. So usually when you have a normal day and IB is wide, what type of day can you expect if the initial balance is super wide?
A range day.
Most of the time you're just going to have a normal day, and you know, opportunities are going to be limited risk, limited reward. That's where you're looking for responsive activity. You're trying to trade normal days as a responsive participant, not necessarily initiative, because you're trying to short when the price goes above the value, and you're trying to be with the crew to bring it back inside the value, or opposite is true. When it dips below value, you're trying to be a responsible buyer and bring it back, right? Normal variation, if I was to visualize this without anything, would be you have the initial balance set, and you basically expand the range extension to one side or the other, but you're not really below the 2x. Does that make sense? Can you guys visualize?
Yes, Shorty.
Okay. You should be able to see every one of these days with eyes closed. You should be, and when somebody wakes you up middle of the night, you should be able to tell them what that is and what it means. Usually, you know, a normal variation, you're going to be below the 2x IB. If you go above, you know, IB of 2x, that really marks it a trend day, right? On these type of days, right, you're looking for re-entries in the trend. You're not necessarily looking for, you know, reversals where you're gonna short the top or find something in the bottom, right? There's chances you're gonna get those bounces, and lately we've had some V shapes. And in the environment, you're looking to play along with this, right? And most of the normal trend days are typically out of the open drive. If you have a gap up, that's even better. If you have access low or access high, it's even, you know, more important to notice that the day is going to be trending in a day of that access where they stepped in. Double distribution trend day, I think we've seen a lot of these, right? Where you have value area that you're agreeing with, and all of a sudden you don't agree with it, and then you go to the opposite end and you build value there, and let's say you close the upper distributions like we did on between Thursday and Friday. Now, if they accept the value in the bottom distribution or fall out of the top, that turns into a bearish day. Most likely you're gonna go in the bottom distribution, but double distribution trend days can be a little hard to play if you're not familiar when the participants enter the market. Remember, what's valuable to me as a daytime trader. So let's say we set the initial balance for the day on Monday. Initial balance low is the value area high of the Thursday, right? Or value area low of Friday. That's a pretty good level. In order for us to break that level during the initial balance, is going to be a lot of initiation. And it's not an expected behavior that you get initiation at the value area lows or prior day value area highs where you're expecting buyers. So you're expecting buyers, and below value area lows, we also expect buyers. So that's why those type of setups that we see set up a lot of traps. So if you're to short, for instance, Friday, where could they execute a trap here?
Value area low.
I mean, you have this zone right here, right? This zone becomes really, really big for traps. So they could, let's say they open at like below this day low here. Let's say they open here, but we know the distribution is being split on a double right here. If this is split here on the double, right, then, do you really want to short below PDL? You can, right? The sentiment below value area high tells you, yeah, there's a sentiment shift. We're rejecting the value here. We're accepting prices lower. But really, the shift will only happen once they crack this. That means the value is going to be shifting to this box right here. So this can be used as an opportunity for a trap, and then we go higher, right? Because you do have a pretty good access low, right? So that's why the context and understanding of what's happening day to day, week to week is important. So in here, right, even though we had the sell-off, still a bullish close, right? Below POC, so they could be baiting some short step in here. The only way we know is once we open on Monday or Sunday night and see what they do. Then if you look at it on the higher time frames, right, you go on the weekly TPO. Let me make sure settings are good. Should be bringing it. Oh, there it goes. So if you look, for instance, this TPO here, let me just enable some stuff. Who wants to take an assessment here? How are we doing? Yeah, well, they added some features here. Does anyone want to take an assessment? How are we doing here?
I have a question.
Sure, I had one too.
So
We keep building value higher.
Say it again.
We keep building value higher.
I'm trying. You tell me. I'm asking you to assess this. Tell me how should we look at it on a weekly profile? Daily, I told you.
Yeah, we've been in a range, but we broke out whatever that like 22nd-ish day is, or trying to assess whether or not there's value above
I'll
there.
try to document what you're saying. So this is this what you're saying? This is the value range high, right? You broke out of it.
Yeah.
Okay. Keep going. I'll go along with you.
And then around the 22nd, it appears as if we tried to assess whether or not there's value above it.
Then they try to bring it under the value, and they clearly did not want to build value lower.
Fair. So far, right, they're telling you the value should be higher. What about value placement?
price is above value, right?
Okay, what about value to value, week to week?
They're kind of stacking.
Are they?
They're not
It's
stacking, but they're like side to side.
Is this a inside, outside week? What is this?
Outside.
We're outside.
The value area low from the 20th is lower than the previous value area lows, and the value area high is
I
higher.
would say inside.
All right, well, let's, now that you said this, right? If value is it higher or overlapping higher?
Overlapping higher.
Overlapping higher.
Overlapping higher, okay. Okay, obviously the volume of this move, how would you guys gauge this?
Oh, it's a little bit lower volume than normal.
Okay, well, let's see on the breakout, right? So this is your breakout.
That was solid, but yeah, it's descending.
Okay, so right now they're not selling aggressively, but the breakout right here was okay, right? They would give them the benefit of the doubt. That was okay, right? They're not selling aggressively yet. And they're not buying aggressively here either yet, like on these pullbacks. Right, so far, it would say checks out in 65 minutes. When you look at the daily here, let's see, let's just delete this. This daily here, it's above average, 30-day average, so it popped higher, and then the Friday's close, it looks pretty not so bullish, right? So a lot less volume, right? And that checks out. It's not an anomaly in this case because the body of the candle and the body here, oh, I'm sorry, the volume here is lower, so it checks out. But what it does tell you is what? Is there anything the volume is telling you here on this breakout?
Slow down in buying.
But the buying slowing down a little bit. Right? So when you think about the figuring out, you know, directionally how we're doing, what are the things that we look for? We look for volume.
But your breakout looks like an anomaly to me
Okay.
because that volume doesn't look that high to support the size of that candle.
Okay.
The initial breakout.
Yeah, these are the three things that tell you directionally how are you doing. So for instance, let's say on the weekly profile on this, because this is a weekly 2 weeks of balance, this is your weekly close. How's that weekly profile for you on that volume?
In a normal. A little, I mean, is your blue line the average? I don't know.
Yeah, 30-day average is the blue line.
Okay, so it's below average.
So this one is below average. While you're at placement, overlapping higher with lower low outside week, correct?
Mm-hmm.
And then the value width, what does that look like?
Question, does it matter that we closed below value area? I think below POC and yeah.
Say it again.
Does it matter that we closed? Oh, we closed above value area high.
Oh yeah, yeah, we're
Okay.
all the way above.
Okay.
So now, what else would you guys add? What about the value width? How's it looking?
It's greater than the prior 2 periods or 2 weeks.
Okay, so market's trying to go higher. Conclusion is that if your value area is overlapping higher with lower low and volume is lower, is that confidence high, medium, or low?
Low confidence.
Not high.
So confidence here would be, let's call it conclusion, would be market attempting to go higher, but weakening overall.
Mm-hmm.
So for now, if you're trying to buy these breakouts, it's not the smartest thing to do. The market's telling you right now, obviously you had this massive gap. If it wasn't for this gap here, what are the odds of the breakout? We will never know, right? We can't go back and retest it. But the market's telling you, if this was a true breakout, the value needs to be stacking higher. Okay. If it's lower volume and value area is higher value, that's good. But this is lower volume and overlapping. That means it's slowing. It's not doing as a good job as this would have if this was the value and they broke it, and then the value area high shifted here and the value area high stay there. That would be pretty good, right? That would mean you have and the volume picked up. You have higher volume, higher value area shift, right? Placement's good, volume is good. That would be directionally performance is strong. That means you're strong. Here, directional performance is strong right now.
No.
So here, market is trying to go higher, but it is slowing down, weakening a little bit. And this happened, they had 2 weeks here, but you see the breakout between, for instance, this week, this range here, and this 2 weeks. Is there any difference? Is there a difference between this and this breakout here?
So wider and overlapping, right?
Yeah, it's wider, but it put in a lower low on the value area, which is concerning, right? You shouldn't be, if you're breaking out, how come you're accepting at one point the value area was lower? And then you gapped up from it. Here, you didn't have necessarily, a gap up on a breakout, but here, when you broke initially, when you broke the range here, you closed on the highs for the week. When you closed here, you're closing at the highs as well, but it's also below this volume node that you built. You're right on the edge of it. So then the crucials, what you're looking for in a weekly is what? What is the level that you have to hold on a weekly? Bigger level. Now look at what is the level you got to hold.
The value area high.
Value area high is definitely one of them, but your breakout started happening at 67.
57, yeah.
Yeah, and then when you look at it, when you zoom in on what we had, look where it happens to be also the single prints on the weekly. So they're showing you, hey, this is a breakout. If we can't hold this, then there's a high chance you're probably gonna visit somewhere around here. You're gonna hit this level, but which they ignored. At least we hit 42. Right? And then ultimately, if you're patiently waiting on a weekly, if they accept prices below 42, what are you expecting?
Explore all the way down.
You would expect us to explore all the way to here somewhere, which we, look at this. If you change this was your previous week value area, high here or value area high here. Look where they came in and created the value area low. So they're telling you here, there's a high chance, right? They're going to come back to here if you're not able to hold 42. So if you take this trade, let's say 42 trade on a longer swing, not many swing ES, right? But you can definitely swing some options. So let's say you play this, like you're playing this range here. This is a lot, right? But this is a swing. If you play this trade here, that's almost 3-1. So if you see that we're cracking here inside, let's say 67, that's already a little bit of a bearish. And as soon as they absorb this guy here, probably not a bad idea to buy some SPY puts, right? And play it for like 2 weeks out. That's how you would play that scenario on a weekly time frame, because you're a weekly other time frame participant. Now I'm trying to differentiate between when I said a daily time frame session was looking short, but overall, even on the Thursday when I said we're looking like we want to go down, I said a long term we have to hold 1960. If 1960 got destroyed, that would mean that the auction was, and that's I'm talking about this right here. I said, don't be initiative trader tomorrow until we lose 60. So we did not lose 60, which indicated that they wanted to go higher, right? Off of this level where they bounced right on. So that's why I was short on a 2-day, 1-day session. It looked weak. And then of course, once we approached this level, they stepped in and they did what they're supposed to do.
Shorty, I got a question on this around the 14th or 15th, where we've got these two tweezer candles. Yeah. Would that be considered a spring, or it's not because at the beginning of that there was an overlap?
I mean, the start of this right here, if you treat this as the bottom, I don't know.
Then
If
it's not, then it's just matching.
And I would say the brackets are subjective, right? Between me and you, what you call a bracket might be slightly different than what I call a bracket. If you look at this is a weekly bracket. If I look at this on 8 hours, there's different brackets now that I can form from here. And you can have brackets inside of the brackets as well. So it's subjective, right? So if I was to look at this, let's say I zoom out and I say go on daily, right? There's multiple ways that you would see brackets here, and from the multiple perceptions, even if I ask you guys draw bracketed markets here, you guys would most likely have different variations. For me, for instance, this will be a massive bracket for me here, right? You had a nice bracket, this nice and balanced candle, broke it, and then it happens to be that you had another bracket. You bracketed again here, right? You had the high, you failed, you came in and you danced. Not the cleanest, right? But it's definitely a bracket. And now what do you have here? I mean, you have this low here to this high here, and this is kind of like a bracket again. And inside of this, if you go 60 minutes, you have brackets again. So it just depends who you are and how you trade, and different time frame will dictate your bracket and what you see. Like this is a 16-minute bracket. Of course, we gapped, but now what about this? Is this a bracket? You have the high, you have the low, a lot of candles inside, right? So if you're not able to hold this, is it that you're going back to the 67? If you're not able to hold that, do you go to the POC where you accumulate it? You go here. Yeah. That's how most of the market will work. But it's just how you see it, and which, here's 5 minutes. You see on 5 minutes, there's also a different bracket. So it's subjective, but usually they're close. I mean, your eye should see some of these, right? And if I'm a monthly trader, right? So the bracket is where? I mean, if I was a monthly trader, the bracket's somewhere sitting here. And this would be a really long time frame trader sitting here. So we just broke the monthly, right? And the breakout on the monthly is it validated yet? Oh yeah, it hasn't been confirmed yet. They're going higher on lower volume, right? So on that time frame, it's different. Just know that, when you measure directional performance of the daily weeklies, they can contradict. A daily time frame analysis can contradict the weeklies. So don't position yourself if you're seeing something on a daily that's bearish, but overall, like we're seeing, let's say on a weekly, or if you go, let's say on a monthly time frame. If you go here, let's see, let's change this one here for a month, right? And now you look at these monthly profiles, right? Using PVP, just gonna go extend it. All right, well, let's look what's happening on the monthly. Is there any reason right now for you guys to be bearish just yet?
Not on that profile.
On the longer time frame, market's telling you to just close your eyes and buy. You have value area stacking higher, value area high, value area low, value area high, value area low. What is the only thing the market's telling you here right now in February?
You had a
Yep.
little more consolidation through most of the month than you had in other months.
Okay, and value area width. Which one is concerning to you guys? Out of these three for directional performance to gauge how are we doing?
The
Market trading outside of value area now. That's concerning.
And that's okay, because why? Can value not catch up with price?
It's just the volume distribution on that top profile is more on the lower side. So it's a lowercase b, which is at the top of the profile, which may mean increased selling, while you're supposed to be seeing upward pressure if it's supposed to keep going up.
Very good. And what else? Well, out of those three things that I wrote, which one here? So you have this volume here that we've spent, I'm looking on the daily. We've spent some time here, right? And this breakout here happens to be above average. So volume overall, I would say for the month of February is not bad, but what about value area width?
not as
It's
wide as the other
narrower,
ones.
and it's getting narrower.
So if the value area is narrow, a couple of things that it tells you, and along with, you nailed it with the lowercase b here, something can happen very quickly, right? And that's kind of what you're monitoring for now. So if you're to go on TPOs on, let's say, monthly, right? Let's shift to monthly. Might have to increase this to 9. Let's do 10. I'm just gonna hide volume. Okay. So if you guys look at this right now, this is your TPO. This is where you spent a lot of time. I'm gonna see if I can squeeze 7. If it works, great. If it doesn't, all right. What about TPO? How's it looking on TPO? What do you guys think?
Looks like a D,
No,
a
irregular.
nasty D.
You
Yeah.
have you have less volume on the top, whereas other ones you seem to have a lot more time spent.
So that
on the
means
top
that
end.
if you're spending a lot of time at higher prices, what does that mean? Are you being accepted or rejected?
It's accepting value.
It's accepting value. So if you don't spend a lot of time at the top and your value area is tight where you left, what could that mean?
They're rejecting.
Could be a
Selling off.
rejection coming eventually because the value area, narrow value areas mean there's not a lot of participation. And if there was no a lot of participation at higher prices and you fall from those prices, then most likely you're rejecting the higher prices. But as of right now, right, you're on the monthlies here, value area high here, overlapped. Your value area low is shifting higher, POC shifting higher. So now considering we're a couple of days away from close, we have 1, 2, 4 days left in February to trade. It's important to see where they close for this month. If they're bullish, what do they have to close above?
$50.50, the value area high.
Yeah, they just have to hold this and make sure that we don't dip below. If we dip below 50.50, what do you expect the buyers to do quickly? Keep in mind, when a value area is narrow, is there likeliness of us visiting and executing 80% higher on a narrow value or a wider value?
Narrow.
Why?
Wider.
I guess it would take less work.
Exactly. On a narrower area, you don't have to traverse, doesn't have to travel as much. So the opportunity from 50-50 to this 49-64, super high, right? So as long as they crack that, and is there a chance that they're going to bounce because there's a little bit of nodes in here? Yeah. But ultimately, this would be the level that they're targeting to go to, 49.66. So you have to keep an eye on this close and see, do they lose this level from the monthly standpoint, where they have this little ledge, let's call it 91, and we know the 87 and a day prior was our single prints. I think it went somewhere around here. Somewhere around here it was, what did I do? I believe it was 87.25. Come on. So if we see this happening, they're most likely going to bring it at least to the value. And I think that's what the daily said for us as well. So now you went through multi-analysis. You saw the weekly, the weekly is what? It was weekly super strong or not? We just showed it. The weekly was slowing, right? It was weakening a
Yes.
little bit. The monthly is still fairly strong because it has higher value shifting, right? We said the volume is not bad. It picked up. But on weekly, the volume was not as strong. It's slowing down, right? And the value area shift, it put in the value area lower low, and it put in a value area high with the outside weak. Here you have a higher high, higher low, everything shifted properly. So the daily looked a little suspect as well, right? We had the open, then we sold off and we closed on the lower end, right? But they're still bullish because they held previous day value area high. So everything is basically coming towards that level that we said about 81, 87, 87, 83 on the monthly. If you're able to crack that level, then higher chances you're going to visit the previous week high that we had of 66. And then if you crack, let's say the 48 level that we have, it confirms it from other time frame perspective that we can go lower. And then you would target, depending on what time frame you're trading or what you're trading, you can take the analysis of multiple and make a conclusion whether market's doing, on what time frame is the market doing well, right? You're outside of balance on the monthly, on the weekly. As we saw, we're back, and then daily we're in balance, right? So all of those things that I just covered, they're able to produce levels, and it's not levels of, that will not play a role that I'm just selecting random levels. You look at the data, you look at the context of the dailies, you look for those separations, the single prints access, and I'm trying to formulate a story. On the monthly profile that you're seeing here, we have a poor high. I mean, is it, and once you're running all-time highs, is it, do you really want to see poor highs if you're expecting the top to be in?
No, you want to see excess, right?
Yeah, you want to see access if the top is in. You want to see the trend stopping. You want to see a auction completing and finding a new auction on a monthly. Right here, when, if you guys go back, let's look at this one right here when we auctioned, right? So this one here also it happens to be a poor low on the monthlies. Let me see if there's any, for instance, this one should have an access right here. Like you see this one here on the monthly. On the monthly profile, this is, I would say this is pretty massive access right here. We're talking about 35 points of access here. I mean, it's huge, right? But then when you see on the top, we haven't concluded that auction yet. And look at the months leading all the way up top. So the only one here is the poor high. It looks like they're going to do it. There's no access anywhere on the monthlies just yet.
Do we expect, if we're going to sell off, like that October low was the low where aggressive buyers came in and shot us up for over a year. Do we expect that same thing on the top?
I would want to see access. That's what I'm explaining now. I don't see that. And what I'm telling you is that monthly looks strong. we need the monthly to show a sign somewhere, and that's what I'm explaining. I don't see aggressive sellers stepping in yet. So monthly showing strength, weeklies it's going, but it's trending, but it's slowing down, right? Because it's moving on lower volume, higher value, but it's overlapping value, right? Overlapping lower volume, overlapping higher value. That means slowing, balancing on a weekly. On the monthly, it's still very strong. And then on daily, we saw what happened on the daily, right? So we are balancing on a daily now. Let's see when it comes up. It's gonna take its sweet time. There it goes. So right now, if you look at it daily, right, you had a higher high. The only thing that's making a little bit bearish, you open, you close at the lows, and you close right at the axis. So Sunday night comes very important. But as of right now, the daily slowing down, looking to balance, but it made higher highs and it didn't close. So it's still very bullish. The only thing is that if it cracks this, it's a thin line between good and bad. Weekly slowing and monthly strong. So from higher time frames, the market is still doing great, auctioning higher. Okay. Does that make sense to most? The multiple time frame analysis and how we're looking at that?
Shorty, can we see the 2022 top on monthly?
Yeah, that's fine.
Yes.
Yeah, strong axis.
Where?
The poor high.
That's a poor high. And that poor high just got fixed, right? But how it looks similar to February in this node is if you guys look to current, kind of similar with the nodes, right? If this is the node below it, if we trigger the selling, it could be similar to 2022, but that's not, a technical drop because that's what happened here, right?
That kind of looks like the prior month too, though.
Yeah.
If you look at that, I mean, January, I mean, not of this, I mean, our current January.
Yep. And if I think what you're talking about is right
See?
here.
Yeah. I mean, it kind of has that same little.
Yeah. So right now, I mean, everything's strong, but if they can't hold this, high chance we revisit this. You failed that, you're visiting this pocket at 49.60. If you lose 49.60, bigger time frame, right? Then you're most likely going to this 48.75-ish, 48.77 area, and then unable to hold this level here is going to be crucial for them. Because this is the true breakout that triggered it. If you guys remember, they popped over it. If they can't do this, then they could potentially traverse all of this, right? And this profile is just going to look a little ugly when I draw it now. Right. So now I'm just looking to see concentration of volume, and you see there's a lot of volume they accumulated right below the resistance. And then they broke. So this run up probably result of this accumulation here. So if they're to fail this right here, you see what the odds are and where they go. Two levels would be important. It would be this, and then it would be the bottom alley area low or the node here somewhere around.
Can you measure the percentage from that POC to where our top is right now? Of what percentage drop that is?
Oh, from the top around here.
Yeah.
Let me use the magnet because it's not working. 10%.
That's nothing.
Pretty much nothing. It's exactly nothing. And when you think about the year, right? Now this is your November, December. So for the year markets, let's call it from here. What, 6%? So, and I mean, from October, I mean, this people invested just in the right here. I mean, you're looking at some serious percentages on that index, right? 25%. That's pretty crazy.
Yeah, it's huge.
Not a normal behavior. All right, so I would say this is probably a good intro on the market volume profile. I have more to talk about, right? Market volume profile, but I think this is a good basic and intro understanding, and then I think examples and usage of market profile and then practice, especially for newer people, is going to help you kind of reach next steps and getting the feedback, whether it's me or others that are using it and experienced. I think that would be the next steps, right? And I plan on holding another class on market profile where we would go in different variations of what happens in reading the context. And I think that's, for a lot of you guys, the creating of the story is where you guys struggle. And I'm not saying that in a negative tone that you struggle, but I think that's the next level for people to pick up the knowledge. Market profile by itself, isolated day reading, is not going to do much for you. But once you're able to create the story and you see the higher highs, you see the lows, and you're able to see who's stepping in, who's stepping out, seeing that if there's any supplies, unless you're at all-time highs to the left, and managing that and compiling the result, that's going to help you. Because a lot of you guys might look at it and just make a conclusion of one fact, right? But in context, right, especially when you add footprints, which should be a target, maybe either next week or a week after, that we do a class combo, finish the market profile, add some examples, and then add the footprints would help you guys understand, market behavior a little bit more than what you do now. So that's at least the goal, what I plan on doing, add more annotations on, charts like this, give you the idea of what is happening and thinking price and value and acceptance and rejections. A lot of you guys have to stop thinking about other behavior, but add, is the price being accepted or rejected here? Once you start answering questions in that tone and that direction, I think it will start making more sense, because you have to, market profile does require your focus and dropping some other knowledge that you might have of, people. The other day, you guys were like, why are you buying here on ES at value area low? Most people were shorting. Well, in a balanced day, I don't tend to short value area lows. I look to go long, and you're looking to catch some points off of those. And that's where retail, when you're taught from the beginning, you short momentum breakouts or you buy long on the momentum breakouts, they work till your practice of discipline and risk is challenged. And if you fail there, you're going to be a failure of a trader. When I'm buying at the value areas lows, I'm taking a higher reward, less risk. When you're shorting value area lows, you're taking a lot more risk, a lot less value. So, and that's where the concept for you guys that are new have to change. And you guys will have struggle with that until you accept what is at this time is not good, until you figure out how to combine it with market generated information to make informed decisions at the time of the trades, not necessarily a day after, post everything that happens. Everybody can talk about it, but can you do it during the day and make those decisions? Okay. Any questions anyone might have to this, anything else? For newer people, do you feel like you gained something? And if you didn't, tell me what you didn't gain so we can address it. All right. Well, I appreciate it, guys. I'll upload this PowerPoint along with the other one on the SharePoint. And as soon as I get the audio tapes from the company, I will be posting that on YouTube, and you guys will have access to it for the rest of your life. It'll be a private link on YouTube.
Thank you, Shorty.
Thank you.
Have a good day. Bye-bye.
Super helpful, Shorty. Thank you.
Thanks, Shorty.